Two girls on his lap and a devilish grin. Yeah, Velvet. Took your girl and your gains in one click. Velvet Kohrs. Trade so wet, brokers call them slick. Velvet Kohrs. He whispered by, she moaned again. Velvet Kohrs. Made your whole fund bend over and pin in. No mercy, no mercy. You got candles dripping like a pole dancer sweat. He longed your ETF while your chick got wet. He margin call marriages, break up your crew, tax your manhood and wrote it off too. Talk slick to the market and do what he say. Gap up, baby, in that chart, obey. He don't scalp trades, he scalps souls. Made your own pal cry and lose control. He poured whiskey in his coffee, profits in her purse. Woke up with a mistress and your girl in reverse. He trade while he fucked, multitasking with pride. She said you come, he said depends on the price. Limit order, girl, I don't pull out of trades. Why would I pull out of you? Most men scared of the dip. Me, I dive in head first, no floaties. Just focus real deep. Your man, paper hands. Me, diamond hands. And a tongue worth 10 grand. Who flipped your chicken, flipped the Dow? Velvet Kohrs. Who made the Fed say holy cow? Velvet Kohrs. Velvet Kohrs. Who dupe a mansion from your calls? That's Velvet. Then bought your girl some new drawers. Motherfucking Velvet Kohrs. He one click closed your whole career. Velvet Kohrs. Even Wall Street whisper when he near. Velvet Kohrs. She said hedge me, he said baby I am the risk. Velvet Kohrs. Too smooth to fade, too rich to miss. Cashing out.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and happy Monday, May the 19th. And finally, I can speak again without having a weird layer of mucus in my throat. So not just a Monday, but it is a healthy Monday. Folks, I hope you had a great Friday. I hope you made a bunch of money. I hope you had a phenomenal weekend. Like me, went outside and got to get some vitamin D from the sun. I hope it didn't storm wherever you live, and I hope you are ready for today. We have lots to talk about, and it seems as if the major push of maybe the whole week, but specifically today, is going to be political stuff. Obviously, we have to chit-chat about the Moody's downgrade of the U.S. from AAA to AA1. It's the same thing that the S&P and Fitch already did, but Moody's, one of the major grading agencies, lowering the U.S. From there, we have to talk about in a couple minutes. I'm actually starting early today because in about 1 minute, they're going to do the White House press conference. And I think it's going to be important because potentially at 10 a.m., we're going to be having allegedly, President Trump is going to be speaking with President Putin in real time as I'm starting this show with all of you. We have a lot of voting FOMC members giving their thoughts and opinions of the overall market. Later on today, we have Trump doing a bill signing. I also believe right now Hassett, the economic advisor, he's talking. So we have a lot of political stuff going down, a lot of political stuff. Even this morning, the UK and the EU having some sort of Brexit agreement. And we know Zelensky at a certain point is going to be popping off of the talks with Russia. So it seems as if a lot of political stuff, almost more than normal, is going to be driving the news specifically today, but also potentially this week. So I want to get into that, break that all down so we're all on the same page there. And then, of course, we're going to be doing the normal seasonality, the major macroeconomic events, and also the earnings of this week. And then ideally, as long as the news isn't too crazy, we're going to have some time to do a little bit of pre-market prep in terms of the key levels of the day. And if we don't worry, I'll do it right at open. We shouldn't be trading right right at market open anyway. At least that's what the stats suggest. So a couple things to get into, a little bit of the political side, a little bit of the macroeconomic news side, and then a little bit of the technical option side. So that's the idea to set us up for really what in the world is going on today. If you haven't seen it already, the market is slightly gapping down right now from market close on Friday. And that all has to do with right after the market closed on Friday, that's when we found out about the Moody's downgrade. Really, this didn't come out of left field. The two major other rating agencies, Fitch and S&P Global, already did it last August. If anything, Moody's was kind of like the awkward last man, like holdout, if you will. And if you believe them and their writing and why they said they did what they did, has to do with the unstable nature of the path of U.S. debt, which anyone looking at the U.S. debt, that's kind of right. It is fair to say that our debt projection is not one that we can sustain for any reasonable amount of time. So I don't think it's that crazy. Of course, now it's the he said, she said game right now. If you don't like Trump, you're blaming him for the downgrade. If you do like Trump, you're most likely blaming Biden for the downgrade. And if you're a person like myself who doesn't like any politicians, you're just blaming the entire political apparatus. So obviously pick your poison for who you want to blame, but it's just where we are. So we have quite a few things to get into. Let me switch this over very quickly. Before I forget too much, obviously a very quick and dear shout out to Public. They are the stream sponsor today. If you're an aspiring option trader or if you're an option trader, this is by far the best place to be an option trader because it's the only brokerage that I know of that gives you a rebate every single time you trade an option. So it is free to download. There are no commission fees. There are no per contract fees. If you're an equities trader, there's no payment for order flow. And obviously I have almost $500,000 of my own dollars on this platform because I love to trade options. And it doesn't really make sense for me to trade options elsewhere because nowhere else can I get a rebate. So if you're watching this right now and you trade options, there is literally no harm or no foul for you to at least download this platform and check it out. I think you're really going to really like it when you start to see the rebates add up and add up and add up. The rebates themselves work in a tier system. So if you want to start off at a higher tier, make sure to use that link pinned to the top of chat and in the description of the video because obviously you're just going to start off at the higher tiers, so you're going to start earning back more money that much more rapidly. But we'll come back for that full spiel in a quick second. Very quickly, here's a look at pre-market. You can see around 16:45 on Friday is when we found out about that Moody's downgrade, and then it got worse and worse and worse. And then at market open, right around 6 p.m., wherever that was, Sunday, right? Well, we'll actually be able to see it better in futures right here. When the market opened up on Sunday, we had a little bit of a gap down. There was a push up to get the upside gap fill. And then since then, we bled all the way until about 4:30. We're getting a bit of a recovery right now, but overall, very clearly down from market close on Friday. Actually, to be super specific, we are down 1%. So 1% hit to the overall market from this downgrade, and maybe a little bit of just like the OPEX situation. I think that's a fair thing to consider. I called this out all day on Friday. Granted, it was in a pretty froggy voice, but all day on Friday, I was telling you, hey guys, a lot of the calls in the system, a lot of the calls that make up the total open interest are going to burn off today because they expired on Friday. So I think it was a 1-2 combo punch of why we're seeing a little bit of a pullback right now. The golden question is, are we going to be able to recover? And I could tell you this really quickly from the onset, the battle of the day is going to be 5,900. So we closed out the day at pretty much 5,960. Right now in pre-market trading, we're trading at 58.96. So we are trading roughly where my cursor is, pretty much just below the low of Friday. The battle is going to be 5,900. If we can get above and hold above that, the bulls are still in control. If we get pushed below that, things get a little bit dicey. And then if we start to take out 58.60, 58.50, then we have that opportunity of maybe in a couple trading days, more of a shorter term swing trade of getting this downside gap fill. So I'm telling you this right now, the battle of the day, the battle of who is in control, who isn't in control is going to be at 5,900. Key technical level, key psychological level, key open interest level. Everything is coalescing on 5,900. So please pay attention to that. And in reality, until we know the winner of that battle, I was putting this in the Discord this morning. Obviously, sign up for the Discord if you want. The first month is free if you use that code Goonie. It's in the description of the video. Anyway, it comes down to the battle of 5,900. And I put this in the Discord that I don't even know if there's much of a point of trading today before we know who is winning that battle. If we're above and holding above, great. Maybe slap on a shorter term bullish position for somewhat of a shorter term recovery. And then obviously if we're failing, well, maybe then it's time for a little bit of a shorter term bearish trade. But it comes down to 5,900. So for me, I'm going to do everything in my power to find that internal monk-like discipline to not trade before we know the result of that particular battle. So that's kind of the TLDR of what I'll be looking for today. I keep checking back to this because I know it's going to be starting shortly. We're just waiting for the White House press secretary to really get rocking. And I guess in the meantime, just to not burn any time, I should probably be going through some of these other major things. All right, so right here we have Dow futures dropped 200 points as yield spike on U.S. debt downgrade. That was the hot news over the weekend, but unfortunately, we actually got some really crazy sad news yesterday. Biden diagnosed with metastatic prostate cancer. Diagnosis comes just months after the former president left office. So yes, the former president, the prognosis is not good. He has a metastasized aggressive form of prostate cancer. From what I was reading, apparently it already spread into his bones. It's hyper aggressive. Especially at that age, especially for what it is, the outlook is not good. So whether you like Biden or you don't, whether you have super positive feelings, whether you have super negative feelings, at the end of the day, this is still a human being. It is very sad. At the end of the day, he still very much has a family. And I don't know if you guys have ever dealt with anyone that's had cancer. It's horrific. I actually don't even know if that word horrific is appropriate to really describe how just truly bad these situations are. Anyone with cancer, if you've ever dealt with it yourself, if you've ever had a family member or loved one that deals with it, cancer, it's horrible. That word is maybe the closest word. It's devastating. It's just emotionally draining. It's very bad. So obviously thoughts and prayers on that. Of course, it's very quickly becoming politicized. What the her recordings tell us about Biden's memory decline. A lot of people saying, hang on, the administration, Biden's close team must have known about this for a while, and it could be representative of his mental and physical degradation that we've seen over the past couple of years. That might be right. I don't know. I'm not a doctor. I'm definitely not an oncologist. I don't know how this stuff does or doesn't progress. Maybe that is why. Maybe there's something else going on, or maybe it's just the fact that he's over 80. Regardless, at a certain point, does it matter now? So that was some breaking news as of yesterday, but bringing it back towards the market today of what I assume you guys are really here for. I just want to share that because it's pretty freaking important. Is the whole Moody's downgrade. Quote unquote, sell America is back as Moody's pushes the 30-year yield to 5%. Bonds are getting hit. Yields are popping, and it's all because the final holdout agency, Moody's, did officially downgrade the U.S. credit rating. Moody's downgraded the U.S. credit rating, citing growth in government debt. Moody's has been a holdout in keeping the U.S. sovereign debt at its highest credit rating possible and brings the 116-year-old agency into line with its rivals. So the S&P Global rating agency and the Fitch rating agency already downgraded the U.S. credit rating back in August. Moody's was, yes, the holdout, and they're finally obviously doing it. Moody's rating agency cut the U.S. sovereign credit rating down one notch to AA1 from AAA, the highest possible, citing the growing burden of financing the federal government budget deficit, and the rising cost of rolling over existing debt amid high interest rates. Anyone who understands basic numbers, this shouldn't be taking anyone by surprise. That's what happens when rates are so incredibly high and our debt is growing and growing and growing. Clearly, our government has a massive spending problem. Now, on the other side of it, you could argue this is a lagging indicator, a little bit slow moving. Scott Bessent, the Treasury Secretary, calls Moody's a lagging indicator at the U.S. credit downgrade. So on Saturday, I believe. He was on NBC News, and he was basically saying it's a lagging indicator. I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. And basically, he's saying, hey, this is the problem from the Biden administration. It's the Biden administration and the spending that we have seen over the past 4 years, not our problem. Now, of course, people who like Trump are basically saying, yeah, it is clearly Biden's problem. It is clearly Obama's problem. It's everyone's problem but our problem. And then everyone who doesn't like Trump is saying it is 100% his fault. All right. Hang on. Press secretary.
Right this morning after a great trip last week. It's good to see all of you back in Washington. This afternoon in the Rose Garden, President Trump, alongside First Lady Melania Trump, will sign the Take It Down Act into law. First Lady Melania Trump was instrumental in getting this important legislation passed. The Take It Down Act will protect victims of digital exploitation, hold internet platforms accountable by requiring them to remove such imagery from their platforms, and provide justice for victims by allowing prosecutors to go after those who publish non-consensual explicit images online. The First Lady met with members in the House and the Senate, survivors and their families, and advocates throughout the process to get this bill across the finish line. We are grateful for the First Lady's hard work and dedication to this issue. And moving forward, she will continue to champion the well-being of our nation's children through her Be Best agenda. I know the President looks forward to signing that bill into law later this afternoon, and we will see you all there. In other news, the One Big Beautiful Bill passed the House Budget Committee last night, bringing it one step closer to final passage. The One Big Beautiful Bill is perfectly named because it represents a once-in-a-generation opportunity to deliver on the Make America Great Again agenda responsible for President Trump's landslide victory on November 5th. The America First policies in this bill are the reason why Republicans currently have the majority in Congress right now. Passing this bill is what voters sent Republicans to Washington to accomplish. And that's why it's essential that every Republican in the House and the Senate unites behind President Trump and passes this popular and essential legislative package. This bill will be the single most pro-small business, pro-family, and pro-American worker legislation ever. This bill will give Americans the largest tax cuts in our nation's history. When Republicans pass the bill, Americans will be keeping more of their hard-earned money and taking home much bigger paychecks. The One Big Beautiful Bill will deliver some of President Trump's central campaign promises. No tax on tips for our hardworking waiters, waitresses, and service workers. No tax on overtime for our law enforcement officers, our firefighters, and all those Americans who are putting in extra hours to make ends meet. And a large tax deduction on interest payments for Americans who purchase American-made cars. Despite desperate Democrat lies, the biggest beneficiary of this tax cut will be working-class Americans and their families. Americans earning between $30,000 and $80,000 per year will pay about 15% less in taxes after this legislation is passed.
Hear, hear.
And according to a brand new paper from the White House Council of Economic Advisors, the average family with 2 children's take-home pay will be up to $13,000 higher because of the increase in wages and reductions in tax obligations. The CEA study also said that the average overtime worker receives a tax cut of roughly $2,000. Again, this is great news for our nurses, our police officers, and all those who work overtime to make ends meet across our country. Put simply, President Trump's One Big Beautiful Bill will be a boon for working-class America. This One Big Beautiful Bill is also pro-family. It will increase the child tax credit to $2,500 per child, establish optional savings account for newborn babies with a $1,000 credit added, and strengthen paid family leave. This bill also delivers historic tax relief to America's seniors by allowing middle and low-income Social Security recipients to deduct an additional $4,000 in payments from their taxable income. If Democrats get their way and the Trump tax cuts are not extended, Americans will face the largest tax hike in history to the tune of $4 trillion. Republicans must not side with Democrats in helping them raise taxes. The One Big Beautiful Bill also provides critical protections of Medicaid, which will strengthen and preserve the program for decades to come through common sense efforts to eliminate waste, fraud, and abuse. Medicaid will no longer be used to pay for barbaric gender mutilation procedures on minor children. And the 1.4 million illegal aliens who are currently improperly receiving Medicaid benefits will be kicked off the program to preserve it for hardworking American citizens who need it. President Trump and Republicans are protecting Medicaid benefits for pregnant women, children, disabled individuals, low-income seniors and families, and the most vulnerable Americans in our society. And that's what Democrats are so angry about. Basic Medicaid protections that will stop the funding of transgender insanity and illegal aliens from ripping off American taxpayers. As you all know, over his first 4 months in office, President Trump ended the previous administration's open border crisis and secured our homeland in record time, all using executive authority. Now Congress needs to act. The One Big Beautiful Bill is the most significant investment in our nation's border patrol and law enforcement agents in our nation's history. The bill ensures that President Trump's popular and successful border security measures are made permanent. Republicans have the backs of Border Patrol and ICE agents who were put through hell over the past 4 years and have quickly worked to secure our southern border. And that's why this bill gives them more resources to do their jobs, including a $10,000 much-needed bonus to ICE agents and Border Patrol agents over the next 4 years. To provide those brave agents with desperately needed reinforcements on the ground, the bill allows for the hiring of thousands of new ICE personnel, customs officers, and Border Patrol agents. These significant hirings will empower President Trump to continue delivering on his promise to carry out the largest mass deportation in the history of our country. Again, that is a promise that Republicans made to American voters. It's a promise they were elected on, and it's a promise Republicans on Capitol Hill need to keep: secure our border. To supplement those efforts, the bill's funds will fund the completion of President Trump's signature border wall. As a result, 701 miles of primary wall, 900 miles of river barriers, 629 miles of secondary barriers, and 141 miles of vehicle and pedestrian barriers will be constructed when this bill passes, along with cutting-edge technology to secure our homeland from dangerous illegal alien invaders. This bill also advances our national security and defense interests by ensuring the United States military has the necessary resources to remain the strongest and most lethal fighting force in the world. The bill will provide resources for the construction of President Trump's Golden Dome to safeguard Americans from potential attacks, give the Coast Guard resources to build more modernized ships, and the Air Force resources to acquire better planes. If all of those incredible things were not enough, the Big Beautiful Bill also finally modernizes air traffic control in America, a bipartisan issue. The bill will allow President Trump to deliver on his promise to overhaul and update our air traffic control systems to keep Americans flying as safe and efficiently as possible. The previous administration failed to act and do this themselves, despite repeated warnings from the GAO, which has resulted in unacceptable delays at major airports like Newark that the Trump administration is working hard to address. When the One Big Beautiful Bill passes, we will replace the current antiquated system, the FAA will enhance safety in our skies, reduce delays, and power the future of air travel in the United States. That's just some of what this historic legislation will accomplish. It is absolutely essential that Republicans unite behind the One Big Beautiful Bill and deliver on President Trump's agenda. There is no time to waste. Americans gave Republicans a once-in-a-generation opportunity to course-correct our country over many wrongs over the past 4 years. And Americans are counting on Republicans to work as hard as President Trump is in this White House every day on Capitol Hill. Send this legislation to his desk as soon as possible for his signature. Here in our new media seat today, we have Liam Cosgrove, the White House correspondent for Zero Hedge. With that, Liam, please kick us off.
Zero Hedge? That's
Thank
cool.
you, Caroline. So my first question is on foreign policy.
Sure.
The president has made several moves towards peace in multiple fronts. India, Pakistan with the Houthis, talking with Iran and talking with Putin. Biden didn't even talk to Putin for the entire span of the war, which is crazy considering two nuclear powers were engaged in a proxy war. So I do admire these moves by the current president, I'll be honest. However, as of today, we are still funding both Israel's and Ukraine's wars. So can Americans expect to finally be done financing foreign wars at some point? Do you consider that one of the president's goals?
Well, I think I can summarize the president's foreign policy agenda with 2 words: America first. And that
Hell
means
yeah,
putting
brother.
the American people
America.
and the American taxpayer first. And that's why the president is moving as quickly as he possibly can and working overtime to end these conflicts in both Israel
Why
and
is everyone
Gaza,
making fun
and
of his hair?
also
Come
the
on. We all have
Russia-Ukraine
bad
war.
hair
As
days.
you all know, the president will be speaking.
We all
with
have
Putin
bad hair
at
days.
10 o'clock. He plans to call President Zelensky when that call concludes. I spoke to the president about that call at 10 o'clock. I don't want to get ahead of those very important conversations, but of
40
course
minutes.
you will hear directly from the president or me after those calls conclude today. So you can expect that. As for Israel and Gaza, the president continues to not only himself but his national security team engage in talks on both sides of this conflict. The president made it very clear to Hamas that he wanted to see all hostages released. And last week, when we were flying out of town, there was great news on that front with the return of Eden Alexander, who is the last remaining hostage in Gaza. So to answer your question, the president is always thinking about the American people, the American taxpayer first. He wants these conflicts to end, not just to save money, but most importantly, to save lives.
Thank you. And my only other question for you is, so over the weekend, President Trump posted Truth Social a video highlighting what most people call the Clinton body count, which is the strange number of suicides that seem to happen in Clinton circles. I have a headline here from the Washington Post that said, Trump peddles false conspiracy theories tying the Clintons to several deaths. So I just wanted to highlight real quick, this wasn't in Trump's video, but this is from the Arkansas Times, and it's the death of Mark Middleton, who was a former Clinton White House aide, who was found dead on a Clinton Foundation property. And I'll just quote from the Arkansas Times. Middleton apparently shot himself in the chest with a shotgun and also hung himself from a tree with an extension cord. So I have no idea how somebody commits suicide that way, but if the Washington Post is here, maybe you can enlighten us as to how that was actually a suicide. So anyways, that's just a lead into my question about the most famous Clinton-related suicide, which is that of Jeffrey Epstein. There's still a lot of questions around that case. You've released phase 1 of the Epstein files. What was missing from that is any connection to his ties to intelligence agencies, and that's really the whole story, that not just trafficking young girls, but doing it on behalf of intelligence agencies, and even potentially as part of a blackmail ring with potential ties to the Israeli government. So for phase 2, when can we expect it? Will it have information pertaining to those aspects of the Epstein case?
I know the Attorney General has committed to releasing those files. I would defer you to the Department of Justice on her timeline, but when she has made a promise in the past, she has kept it.
Sounds
and
like
I'm
natural
certain that
causes.
She will in this case as well. Rachel.
Thanks so much, Caroline. The president set a 2-week deadline for Ukraine and Russia to negotiate a deal. That time is now up. Does the president intend to set a new deadline on this call with President Putin? And how much longer is he willing to give these talks?
Yeah, I don't want to get ahead of the specifics of the conversation the president will be having with President Putin in less than an hour this morning, but he has made clear throughout the entirety of this conflict, since he inherited it from Joe Biden. Don't forget, this is a war that began because of the previous administration's incompetence and weakness, and President Trump is working very hard to fix it. He has made it clear to both sides that he wants to see a peaceful resolution and a ceasefire as soon as possible, but as for specifics on a timeline, I won't get ahead of the president.
And just on the goals for this call in particular, is the goal to get Putin to agree to a ceasefire? Is the goal to lead to some sort of in-person negotiations with Putin and the president?
Well, I think, again, we'll see how the call goes, and the president has made it clear his goal is to see a ceasefire and to see this conflict come to an end, and he's grown weary and frustrated with both sides of the conflict. The president and his team have put an enormous amount of effort in solving this very complicated war that, again, began because of the last administration's weakness.
Does he still want to meet Putin personally?
I think the president would certainly be open to that, but let's see how this call goes today.
What's the status of the secondary sanctions package? The president's been talking about that. You haven't imposed them yet, but is that still on the table?
I think everything's on the table, yes, and again, I won't get ahead of the president in any commitments or decisions, but certainly it's something he's been looking at and discussing. Elena.
Hi, Ken. I want to ask you about the House budget bill. So does the president agree with Republicans behind this bill that Medicaid work requirements should be implemented as soon as 2026?
So the president wants to preserve and protect Medicaid for Americans who this program was intended for, the most vulnerable in our society: pregnant women, low-income families, seniors, those who truly need these benefits. And it should be going to people who physically cannot work. We want to see able-bodied Americans, at least working 20 hours per week, whether that's part-time or full-time, whether that's even looking for work or volunteering for 20 hours a week if they are receiving Medicaid. These are common sense provisions. These are common sense changes that were actually introduced by former Democrat President Clinton. They've been supported by every Democrat president since, including the previous president, Joe Biden. But again, these are common sense reforms to ensure that those that this program was intended
Market's going to
for
open
receive
in
those
5
benefits.
minutes.
And just a quick follow-up.
5 minutes.
Is the president okay with this bill adding to the deficit?
This bill does not add to the deficit. In fact, according to the Council of Economic Advisors, this bill will save $1.6 trillion. And the president absolutely understands and hears the concerns of fiscal conservatives and of Americans who want to get our fiscal house in order.
Yo,
That's
folks,
what the
smash
intention
that
of this
like
bill
button
is.
before market
There's
opens.
$1.6
We should be at
trillion
1,000
worth
by
of
now.
savings
Come
in
on.
this bill. That's the
Just smash it
largest
on both Rumble and
savings
YouTube.
for any
Just break
legislation
your
that
mouth.
has ever
Just
passed
boom,
Capitol
boom,
Hill in
boom.
our nation's history. The next bill that even comes close was $800 billion. That's less than half of the savings that we see in the One Big Beautiful Bill. And so the goal of this bill is to produce economic growth, to cut taxes, and to get our fiscal house in order. And this is the right step in the right direction towards doing that.
Thanks.
Edward.
Yes, thanks.
And then I'll go to you.
Thanks,
You're
guys.
welcome.
I want to get the president's reaction to Moody's
Thank you.
downgrading
You guys
the
just
credit
ripped it by an
rating
extra 100.
credit
Thank
rating
you.
of the United States.
Sure. Well, look, the president talked about this over the weekend. The Secretary of Treasury also talked about it. When you look at the world, the
Whoa,
world has
another
confidence
100.
in the United
You guys
States
are feeling
of America
feisty.
and our economy once again. The president just last week secured trillions of dollars in investments from countries in the Middle East. We have seen trillions of dollars of investments flowing into our economy since the president took office. That is because America or people around the world have confidence in the United States of America. And if you also just look at the
Another
raw
100.
economic data that we're seeing, last week when we were out of town, inflation dropped once again. Oil prices are dropping, gas
don't
prices are dropping.
disagree,
The president
Joe.
has added nearly 500,000 jobs to the American economy already.
I'm gonna smash
so there's
you,
a
that's
lot of
aggressive.
optimism in this economy, and the president disagrees with that assessment.
And I want to ask you one more thing, if I could. On your Middle East trip, the United Arab Emirates is getting some of the most advanced AI chips, and there's agreements there. The UAE is the newest member of BRICS. Is there a concern from the president that those chips and the technology will pass through to China, India, Russia, and
Are you guys
Iran?
seeing this guy's
Part of
jawline
going to
back
the
there?
Middle East was to ensure that the United States, that this part of the region, our Gulf partners, know that the United States of America is there for them again, and that they should be investing in the United States, not in China. And these AI agreements, particularly the one the Secretary of Commerce signed in the UAE, has security guarantees to ensure that China is not getting the advantage, but the United States is getting the advantage when it comes to AI, and that the UAE and the U.S. are working hand in hand together to invest in this space. So read the agreements, there are security guarantees, and this was a great trip for the country, no doubt. Go ahead.
Thanks, Caroline. Prime Minister Netanyahu of Israel has said today that Israel will take control of all of Gaza. Is that a goal that President Trump is comfortable with or that he supports?
I'll have to talk to the president about those comments as they just came, I believe, from the prime minister this morning, and I'll let him speak on that. The president has made it very clear he wants to see this conflict in the region end. He wants all hostages to be released. He was pleased that Eden Alexander was returned home safely to his loving family. The president spoke with Eden directly while we were traveling to the Middle East last week. As for the prime minister's comments, I'll let the president himself respond to those. Sure.
Two questions. One, how involved does the president intend to be directly in talking to House members about the bill over the next couple of weeks or the next week?
Sure. Well, over the weekend, the president was in direct conversation and communication with the Speaker of the House. He's been very involved. He always is. He's willing to pick up the phone when he is asked to. So he'll continue to be very engaged in this process with both House members and his friends on the Senate side as well.
And on former President Biden's cancer diagnosis, the president put out a very nice message on Truth Social. Has he talked to President Biden directly? Does he intend to call? What does he intend to say directly?
Not to my knowledge. I don't believe they have spoken, but I'm sure the president would be open to doing that. I spoke to him last night about the former president's cancer diagnosis, and the statement that he put out was the initial reaction he had with me on the phone as well. Peter.
Follow up on former President Biden. White House doctors may have missed the early stages of his prostate cancer. So Is President Trump worried
Dingity
about the
ding ding
quality
ding.
of care
The
that
world's
presidents
largest
get here?
casino is
Not
now
as far as
open.
President Trump is concerned. The White House physician we have here is phenomenal, and the team of physicians that take care of the president, particularly at Walter Reed Medical Center, are great. The president had his physical recently, as you know. He had perfect results. He's in very good shape. I think those of you who traveled to the Middle East with us last week can attest to the president's endurance. And by the way, I will add, we returned home from a very long and tiring trip last week. And on Saturday, where was the president? In the Oval Office working all day. He doesn't stop. He doesn't quit. He's in great health, and he trusts his physicians.
Two more things. Putin ghosted everybody at these peace talks last week. As President Trump phones him today to try to figure out an end to the Ukraine war, does he think that Putin is the good guy or the bad guy?
I'll let the president speak on that conversation later. He's made his feelings about both sides of this war quite clear throughout it. He wants to see it end.
And
Annie,
the
go
last
ahead.
one, what does President Trump mean when he says that Taylor Swift is no longer hot?
Look, he is speaking about Taylor Swift's political views and how perhaps it has impacted the support of the American public for her work. And I will leave it at that. Annie, go ahead.
Thanks so much, Carolyn. I'm just going back one more time to the White House Medical Office because there seems to be some question about this with regard to President Biden's screening. Can you say whether or not President Trump is screened for prostate cancer as part of his physical?
To the best of my understanding, he is, but we can certainly check in with the White House physician and go back and look at that physical report.
Tesla
One other
breaking
question.
this previous low.
Recently, Stephen Miller at the White House made some comments about considering suspending habeas corpus. And I'm curious if there's any update on how the White House is exploring that option to enact the president's agenda.
I don't have any update at this time, but I can check in with our Deputy Chief of Staff. Mary Margaret, go ahead.
Thanks, Caroline. Given the ongoing revelations about the former president's mental acuity and how staff and media covered that up, especially with the release of this book, 2 days, I think, is there any interest in further scrutiny of Kevin O'Connor, the former president's physician?
UNH is up
I'll let the
3%.
president speak on that.
Microsoft's also
I
green.
spoke to the president again about the former president's health diagnosis last night, and he wanted to extend his warmest wishes to the former president and his family. But as for any further action, I'll let the president speak on that first. Michelle.
Vice President Vance's meeting with Zelensky. Can you share any more information on that?
My understanding was it was a good meeting, a productive meeting, and we're grateful that the vice president did it and that he also went to the Pope's first Mass in Rome. I also have an update on that. The vice president passed along a letter to the Pope from the president and from the First Lady extending their warm wishes and inviting them to the White House as soon as they possibly can come. Michelle.
On Iran, Steve Witkoff said yesterday that continued enrichment is a red line for the U.S. The Iranian foreign minister says that's going to continue no matter what. How committed is the U.S. to that red line, and what's the next step for the next round of talks?
We are 100% committed to that red line. The President, Special Envoy Witkoff, Secretary Rubio have made that incredibly clear, not just to the American public, but also in those discussions that Special Envoy Witkoff has had directly with the Iranians.
And the next round of talks?
I don't have an update for you, but we can get one. To the back row. Go ahead.
Thank you, Caroline.
You're welcome.
South Africa's president says he's going to come to the White House to meet with President Trump on Wednesday. What are the president's expectations for that trip? And South Africa's president recently said he believes the folks that have been resettled here recently are cowards running away from problems in South Africa. Does the White House have a response to that?
So I did see the South African president put out that statement. I want to confirm on our end with our Secretary of State and National Security Advisor, and we'll get back to you on that. Monica.
Thanks, Caroline. You mentioned the President and the First Lady are signing the historic Take It Down Act this afternoon. I'm curious to know, what are some of the repercussions or consequences for these online platforms or perpetrators that won't comply with the act?
Well, what this bill does, it takes the initial step to ensure that prosecutors are able to take down, that's why it's called the Take It Down Act, platforms that are allowing this sexually explicit content
We're holding 5,900.
on their platform. So it gives them more leeway to go after
for the bull
them as
camp.
they see fit. But as for specific repercussions, I would defer you to the Department of Justice of how they plan to implement this bill once it is signed later today. Brian.
Yes, thank you. You said in your opening statement you talked about this MAGA
Upside gap fill on the SPY.
Exactly
We have
how
more
that
distance to go for the NASDAQ,
who would be
517.10.
women
That's about a $1.50, $1.60 and some
so
change.
One of the provisions in the One Big Beautiful Bill, as I said, this is a very pro-family piece of legislation. Not only does it increase the child tax credit, but it also includes MAGA baby savings accounts for children that are born before January 1st, 2024, under 8 years old, U.S. citizens, and have at least one parent with a valid Social Security number.
Let's see if it can hold
and when this
5,900.
tax provision becomes law, the child, if the parents seek to do this, will be set up with a savings account. Essentially, it's a 401k for a newborn baby. And child's relatives, their parents, can contribute up to $5,000 per year of after-tax dollars annually to that account. And then later in the baby's life, at age 25, savings account holders can withdraw up to the full balance of the account. Upon reaching 30, the account holders can access the full balance of the account for any purpose desired. So it's a great initiative for new parents, new mothers who want to set up this savings account for their children.
That's pretty cool, honestly.
President Trump and his top economic aides have repeatedly said that Americans will not pay the cost of tariffs. In fact, last week, Lutnick said people have to drop the, quote, silly arguments that consumers would pay the cost. But
Options
over the
flow
weekend, as
is
you know, the
sideways.
president
No clear
posted
flow.
that Walmart
From a technical
should keep
perspective,
the
we
tariffs
are
and
holding
not
this
charge the
key level at
value customer.
5,900. We're
I'll
almost
be
breaking out of the
watching,
transition
and so will
zone,
the customer.
back to the
So,
bulls being in control.
does he
The SPY
acknowledge
did
that
get
the
its upside
companies
gap fill.
don't
The
absorb
Qs
the
are
full
close
cost
to it,
Americans
about
will
$1 to
have
go.
pay?
Well, first of all, the CEO of Walmart made those comments about the tariffs on an earnings call where CEOs, I believe, are legally obligated to give the most dire warnings and forecasts to their investors and stakeholders. The reality is, as the president has always maintained, Chinese producers will be absorbing the cost of these tariffs. And that is why China was so quick to hustle to the negotiating table with the United States of America. They need our markets, they need our consumers. And I would again point you to the inflation report that came out last week showing that inflation is declining in large part because energy prices are dropping across the board in this country because of the president's robust energy agenda that he has taken since January 20th. So the president is committed to ensuring that prices remain low for American consumers, and he maintains the position that foreign countries will absorb these tariffs.
What does he mean by "I'll be watching" to Walmart?
He'll be watching, seeing what they're doing. Jennifer.
Mag 7 trending down, S&P 500 trending up.
Is there a timeline for the U.S. receiving that plane? Do you know how long it will take to retrofit
Resistance
the
at
plane to
59.20.
presidential standards? And thirdly,
I have it
has
at
the
25.
intelligence community,
Trying to
security
break out. We're
folks,
at
have they
resistance
weighed
right
in
now.
on
Risk
whether that
reward
plane
is not
can
good to go
actually
long
be
at this
secured
point.
to presidential
If you wanted to go long, you
I'm
should have
glad
gone long
brought up
earlier
this
because we could
question
easily get
because
rejected
I
right
was watching
here.
the American press spew a lot of misinformation about the plane donation last week when we were abroad. Let's be very clear. The government of Qatar, the Qatari family, has offered to donate this plane to the United States Air Force. Where that
30
donation
minutes trying to
will
go
be
back bullish,
accepted
coming into
according
some
to all
technical
legal and
resistance on the
ethical
NASDAQ.
obligations. It will be retrofitted to the highest of standards by the Department of Defense and the United States Air Force. This plane is not a personal donation or a gift to the President of the United States. And everyone who wrote that last week should go and correct their stories because this is a donation to our country and to the United States Air Force. As for a timeline, because it is the United States Air Force that is accepting the plane, I would defer you to them for specifics because the president, frankly, has nothing to do with it. It's the Air Force's project to take on. Sure. Elizabeth.
Thanks so much, Caroline. Did the president call fiscal conservatives who were hesitant to vote for the Big Beautiful Bill? And if so, what did they say? What did he say?
I don't reveal the president's private discussions unless he gives me the liberty to, but he has been engaged in this process. He spoke to the Speaker of the House, and he will continue to make those phone calls if it's necessary.
The Qs are going for their upside gap fill. 517.10. That is the low from Friday's trading session. We are almost there.
Trips, and do we have any details you can share with us?
I don't have any future foreign trips to read out for you. We just returned home from one. But the president maintains the reasoning for Greenland's strategic purposes in the Arctic, and he continues to remain committed
NVIDIA
to
recovering
the idea
decently.
of obtaining
Coin's
Greenland
green now
in
as well.
whatever means we can to advance our national security interests in the region. Sure.
Thank you, Caroline. I have a question. Was Lebanon part of the discussions during the Middle East tour? And did you meet with any Lebanese
Mag 7 just caught a bid at 9:38.
To my knowledge, the president
and
did
the
not
spy's
meet
been
with
trending
any
up.
representatives from Lebanon, although he did talk about the election that they recently had there and how he hopes that Lebanon can come to a more peaceful place in their country and that we drive out Hezbollah, Iranian-backed Hezbollah proxies in Lebanon to ensure peace and prosperity in that
EMAs
country
are all
and
now
also for the
bullish.
greater Middle
EMAs
Eastern
are all
region.
now bullish.
I would just add to that
Mag
before
7's
I
kind
wrap
of
up,
flat.
the president's
SPY
call will begin
is
in a few
the
minutes.
options flow
The
is
president's
bullish.
historic tour to the Middle East last
Nicely
week
holding this
truly
key level.
resets
We are
our
above the
foreign
transition zone.
policy
Next
agenda
target
in
is
that region. I think
5925.
actually, in fact, the Washington Post had a headline: President Trump remakes U.S. foreign policy in the Middle East, and that's absolutely true. He took a courageous and bold step to lift sanctions on Syria. He strengthened our ties with our Gulf partners, and he put Iran into a very difficult position because the United States of America is back. And I will summarize the president's trip with an anecdote that I heard directly from a member of one of the foreign delegations. I asked him how hopeful their country was when they learned President Trump won the election. And he told me when President Trump won the election, it was like the lights turned on in a dark room. For the past 4 years to the rest of the world, America was dark. We were unresponsive. We did not pick up the phone. We did not return calls. All of that has changed under the leadership of this president. And I think the world saw that last week with this historic and wildly successful trip. And the work continues. The president will be speaking to President Putin at 10 a.m. and we'll have a readout for you after that call. And we'll see you in the Rose Garden at 3 o'clock. Thanks, guys.
Thanks, Caroline.
All right. Let me just make sure one thing is set up properly, and we are here. All right, cool. We did that. Let's get rid of all this. I just want to remind you, in about 19 minutes, they are expected to have a call between President Trump and President Putin. Obviously, that's when the call starts, so I don't think we're going to be hearing updates about the call until later on, but I just want to let you know that is allegedly starting in about 15 to 20 minutes. So another hot political thing of the day. Now, didn't have quite enough time to do it this morning, so let me do it now. These are, in my opinion, the key levels of the day. Obviously, the white box is my transition zone. Above it is bullish, below it is bear, within it is choppy. This transition zone is created from looking at the 0DTE GEX and DEX. So it gives us a better idea of how market makers are going to have to react. They behave differently in all three zones, hence that's why it's a transition zone. Up here, it's more supportive. Down here, it is less supportive, and within it, it's kind of a no man's land of doing nothing. So that's why it's the transition zone. Then we have the green, the red, and the white. That is the previous trading session, i.e. Friday's high, low, and close. Very important technical levels. And then the yellow lines are the major open interest levels of the day, looking at the full chain and more specifically the 0DTE. So this was fully described in the Discord this morning. 5,900 is the battle zone of the day. If we could hold above it with a little bit of a kicker of can we hold above 5910, the bulls are still in control. Now, if we fail 5910, especially if we fail 5900, that's when I would start questioning things. And then I would say, oh, the bulls the bulls lost control and the bears regain control in the short term if we give up 5875. Those are all the key levels I'm watching. Obviously, feel free to screenshot this. Feel free to write these levels down. Feel free to do whatever you want, or you could just join the Discord. Remember, the first month is free anyway, and you could see it all there and more of an in-depth breakdown of what I'm looking for and what I'm not looking for. But as of today, like this became a really easy upside target day. We were holding 5,900 right out of the gate, literally minute 1, 2, and 3. We battled, we held it. So within 3 minutes, you could have said, you know what? I'm taking a stab at this upside gap fill. It hit it at 934. And then if you played the NASDAQ, you're like, okay, I'm going to take a stab at it. You're risking the recent low. You got the pop off at 936. And look at that. It ripped right up to the upside gap fill. Those are high odds plays, especially if it's not like a mega news event. So if you played it today, congrats. I personally didn't play it just because I was here hanging out with you guys. In reality, I've kind of, gotten to the point where I've been playing it less because of how hyper political things were in April. But now that the VIX in a general sense is calming down, I really am starting to reconsider playing that strategy once again. Prior to the whole trade war thing, it was actually like a strategy I really, really enjoyed playing. So it might be coming back into fashion. As of right now, the Mag 7 was weak up until 938, and then from 938 until now, the bulls are regaining strength in terms of the Mag 7 delta flow. Remember, the delta is a measurement of the short-term bullishness or bearishness in the options market. As the delta goes higher and higher and higher, obviously that's bullish, and then the opposite is clearly bearish. Now, looking at the S&P 500, it actually started gaining strength 3 minutes into the day, so there was a 5-minute extra lag in the Mag 7, but in the overall market at 933, you could see it was a slight baby downtrend, maybe kind of sideways, and then it started to pop to the upside. I suppose right now in real time, as I'm talking about this with all of you, we see a little bit of profit taking right here in the calls, and some puts are being bought, dropping the delta ever so slightly. But today is really being dominated by calls thus far, while no one is touching puts. That is, as of this moment, 15 minutes into the day, the skinny on the situation. Now, of course, just because something happens in the first 15 minutes, that's not necessarily representative of the entire day. If we're looking at the Orbo, actually, we just got the 15-minute Orbo breakout on the NASDAQ right here, and we're not that far away from getting the 15-minute bullish Orbo breakout on the SPY. I don't know if it technically broke it. No, it was a couple cents away on the SPY, but we did officially get it on the Qs. Now, if you don't know what an Orbo breakout is, it's the opening range breakout or breakdown. Basically, you look at the first whatever time frame you care about, 5-minute, 10-minute, 15-minute, 30-minute, hour bar of the day. You look at the high, you look at the low, and then you wait for one of those extremes to be broken. If you're looking at the 15-minute Orbo, in the past 3 to 5 years, looking at the SPY, looking at the Qs, the 15-minute Orbo, if you break to one side, there's a 50-50 chance at some point in that trading session, you break the other side in that trading session. Now, by the time you go to a 30-minute, the odds drop, as in if you break, there's less chance of a reversion. And by the time you go to the IB, the initial bounce, which is the 60-minute Orbo, the first hour, the odds really drop. If you want the specific numbers and you want to see how they're updating, because remember, the market is dynamic, it changes day in and day out. That's exactly what you could use Edgeful for. But I just wanted to explain that, yeah, we're getting a nice pump. I wouldn't chase it. Generally, I find buying at an extreme of the day, at the high of the day, or shorting at the low of the day, that's just not good risk reward. Even if you're bullish right now for day trading, I'm not talking about swing trading, but I'm talking about, hey, you're a day trader, you're looking to be in this play for the next, whatever, anywhere from 10 to maybe 1 or 10 minutes to 1 or 2, a couple hours. Like if you're a day trader, don't go long at an extreme. Don't go short at a different extreme. Well, I should say it's one thing to go short here because you have minimal risk. I actually understand that completely. I'm saying don't go long at the high of the day and don't go short at the low of the day, because by definition, you are taking on the most risk possible. That's what happens when you go long at the high of the day or short at the low of the day. You are literally risking top ticking, and not in the way that you want to be top ticking, or you're risking bottom ticking, once again, not in the way that you want to be bottom ticking. So even if you're bullish here, and hey, I see it. I'm seeing the delta up. I'm seeing the delta up. I'm seeing bullish on all time frames. I'm seeing bullish on all times. I get it. I agree that it's bullish, but just because something based on our metrics is looking bullish, that doesn't mean it's an appropriate time for you to buy. Remember, the other thing you have to consider is not only the metrics of who's winning the battle, it's more of, can you get in with minimal risk? You always want to be questioning, what is your risk at that moment in time? So once again, just because things look bullish, and they might be bullish, well, if you have a position, great, ride it. But that doesn't mean just because something's bullish doesn't mean it's the good time to buy. Just because something is bearish doesn't mean it's a good time to actually short. The other question you have to ask yourself is, what is your risk at that moment in time? And if you don't have good, reasonable, small risk, you just got to wait. You got to have that patience. So Just want to call that out to everyone. I agree with you. Right now, on an intraday basis, this is a nice recovery. We opened, we pushed, we held a key level, we got the upside gap fill, enough for the Qs to also get their upside gap fill, and we're continuing higher. We are at my next key level. That's another reason. Not only would I not go long at the high of the day, but going long at the high of the day, that is also overlapping with a major open interest level. No. I would rather see this pullback to another key level, maybe a little bit of a basing, and then a bounce off of that key level, and maybe on attempt 2 we can actually break out and then run to my next level. I wouldn't just because we're going right now. I find too many retail traders are just chasing because they see it going up. That's referred to as recency bias, where people see what just happened and they assume it's going to keep happening, and it gets really dangerous. And I get it, if you're a trend following trader, there's some sentiment to that, but it gets dangerous when you're doing it with outsized risk. That's where you're going to get in trouble. That's where you're going to get in legit trouble. Now, very quickly, you guys were so nice and you exploded the likes, at least on the YouTube channel, above 600. Where'd we get to on the Rumble channel? You guys are lagging behind on Rumble, 164. But I was going to tell you guys at the start of the day that if cumulatively we got to 500, I was going to do a tarot card breakdown for you. So even though I didn't announce it, I'm still going to be a man of my word, and I'm going to let you guys know exactly what the market's going to be doing today. Exactly what the market's going to be doing today. I've been shuffling this the entire talk, so there's a lot of magic mixed into this baby, and let's let it rip. 3, 2, 1. All right, not looking, no cheating. Abracadabra, alakazam. Oh, market lords, tell us your path of the day. Oh, Jesus. Well, that has to be good, right? I pulled the moon card. I don't even have to look this one up, baby. I don't even have to look this one. The fuck, dude, it's right there. It's right there in black and white, as they would say. The moon. Like, do you guys need, seriously? Do you need a better pull of the day? Folks, not only is there a picture of a very handsome cat and a very cool moon with a majestic medieval background, it's the moon. Can you guys read? It says it right there. It says it right there. What else do you possibly need? All right, remember how I was telling you you shouldn't be buying at the high of the day and you need to respect your risk? Switch it. New financial advice is about to drop. My newest opinion on the situation is rip it all. Second mortgage, triple mortgage your house, do whatever you need to, put all of it in YOLO. Don't even do 0 DTs. Do next hour expiration. Find something that's expiring by noon. Go shorter than 0 DT. Here I was telling you guys to care about your risk, and I was wrong. I'll admit it. I didn't realize that the market gods were going to be giving us such a day to everything. Mortgage your house, your parents' house, your neighbor's house, raid your kids' college fund, no more food, throw out the grocery bill, throw it all in the market for something more degenerate than a 0 DTE. More degenerate than it's guaranteed, folks. It literally, I don't know. Here I was coming into the show about to preach to you reasonable risk to reward management, and I didn't realize that we were going to have a lottery ticket of a day. A lottery ticket of a day. The moon. I don't know what else to tell you, folks. It's just the market gods have spoken. The market gods have spoken, and we are off to the races. I wish we pulled that earlier because I would have known to not even attempt to preach reasonable risk to reward management. Had I known I was going to pull that card at market open, I would have gone full tilt. And I would have been up a shitload too. It would have worked. That's the sad thing. But this is what happens is when I don't pull the cards. This is why you guys have to hit the like button early, because we got to get to the level where I can pull the card, and we would have done that before the market even opened. Done. House mortgage leverage 1,000%. You only leveraged it 1,000%? I didn't know you were playing cautious today. You only leveraged it 1,000%? Wow. Mr. Cautious Carl over here playing it. I get it. It's a Monday. You don't want to do anything too crazy. I get it. I get it. Maybe Monday you're like, oh, okay, I get it. That's a good car, but like maybe you didn't have a good day on Friday. Maybe you had a rough weekend, so you're being a bit more cautious. I'm not going to slam you for that. It's just 1,000x. Yeah. What's that? A leverage rate for ants? That is cool. Don't worry about it. I'm not gonna judge you guys. I'm not gonna judge you guys. All right, let me check a couple other tools just to see what the flow of the day is and give you guys a little bit of a better understanding. Okay. It looks like the bounds of the day as of now are roughly 5,900 on the low side to 5,950 on the high side. So we might be playing in a bit of a tighter range. And look at that. We're smack dab in the middle right now. So I'm thinking that this opening low might be the real low of the day. And if I were targeting something on a 0 DT basis, I wouldn't be much more greedy than the upside or of hitting the previous close value. Not just because that is technical resistance, which it is technical resistance. We also have options resistance, but it's also going to be outside the bounds of the expected move on the day. So there are various things all coming to a peak all the way up here. So like I said, if you are a degen playing it, I would not be greedy beyond this point. 59.50, 59.52. That's as of right now what the market is reading of legit like potential upside. Dude, that's actually looking kind of nice. You know what I'm going to do? Let me do something a little fancy today. You know? A fancy pants Monday, if you will. A fancy pants Monday, if you will. All right. Can I get this trade fired off? All right. At least one's pending. I have a trade pending. And it is not getting a fill. Why is it not getting a fill? Well, that makes no sense, Batman. That makes no sense. All right, we'll chase it a little bit. All right, this is not a futures trade or anything like that. This is, if anything, just a Discord and premium selling trade. And if you're in the Discord, I am working my fastest to get it into you guys right now. If you are in the Discord, I am doing everything in my power to get it to you guys right now. Now, obviously, based on the coffee thoughts and the description that I put in there this morning, if it makes sense to you, dude, have at it. If it doesn't make sense to you, never blindly copy someone. If the trade doesn't make sense, that is not your opportunity whatsoever. All right, let's get in here. All right, if you're in the Discord, I put that trade up. And I also had horrific typos, so I guess that's just something that you're going to have to deal with. All right, we did that. That's one trade. Oh, I haven't showed you guys this, but just to prove that I haven't been that much of a degenerate today, I haven't traded on any of my accounts. All my accounts are fresh accounts. I blew my accounts out, unfortunately, on Friday. I just started over trading and being basically an asshole. But here I am. I have my 20 Apex accounts and my 5 take profit accounts. They're all at 50K. None of these are evals. These are all funded accounts. But just to show you, I haven't done anything yet right now. I'm just waiting for that opportunity. And if anything, I'm really just waiting for the change of the hour, just to see what's going on. But right now, Tesla's flat. Unfortunately, Nvidia's picking up nicely. Netflix, not that far off from going green. I would love for that to go green. Here's a look at the Mag 7, ripped up until about 951, taking a breather now. The S&P 500 also ripped up until about 948, going flat. It's not really bearish. It's more of flat. And what we have is all that call buying. It just started to chill out. No one's really been touching puts at this moment on the S&P 500. Puts are very flat. It's more of the call aggression. So this isn't a lack of bearish. This is legit bullish. People are buying 0 DTE calls on this dip. And I would say they're probably, if we can hold this breakout right here, 59.25, I would have preferred a pullback. But if we could hold this breakout, I'm targeting 59.50. Yeah, it's pretty much that straight. Like it kind of goes this one way or the other. Either we hold this and we rip up, and I think that's going to be the extreme of the day, or we fail at this and we come back and we either retest 5910, the start of the transition zone, or the low of the day and the key psychological level of 5900. And it just so happens that is 1-to-1 risk to reward. So if you're feeling lucky, you could go for that 1-to-1 trade. And obviously, I wish you the best of luck. I hope you absolutely crush it. I would say right now, of course, the market is 50-50, but looking at the EMA, bullish, 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 bullish. It feels like the bulls are dominating on that. And then looking at the flow, I would say it's more so of an upward slope. I mean, of course, that hit right there doesn't look so good. And right now it's kind of petering out a little bit. But the overall trend is, I would say, favoring a bit more of the bullish argument than the bearish argument. But once again, that's just one man's opinion. Do whatever you want. It is your money, and I'm not your mom. I am not in charge of your money. So whatever you choose to do, well, first of all, I hope you make money, unless it's the opposite of my position. And then if it is the opposite of my position, I hope you very much lose money, because I would prefer to make money and not lose it. But once again, why not trade futures Bitcoin? I don't know, trade Bitcoin. Why not trade cocoa? I don't know. Are we just asking a random question of why not trade every single asset in the world? Why not trade silk in the Cambodian market? We could sit here all day and just ask questions of why, like we could literally just go down the list of every single asset in the world and ask, why are you trading that or not trading that? It would be an endless situation. Golden spider silk. Yeah, why aren't you guys trading golden spider silk? Why aren't you trading bacon? I don't know. Trade what you want to trade. Trade where you think there's an edge. Trade where you think you could be net profitable. Trade where there's good odds on it. Trade where there's decent regulation and you're not going to get completely scammed in that market. I don't know. The list goes on and on and on. Why not trade AMC? Well, I think there is an advantage to trade AMC if you're bearish. I think, yeah, if you like shorting things, I think something like AMC is like actually a pretty solid opportunity. I think something like AMC could provide a plethora of opportunity. Oh, brother. Are we about to get this range breakout? What would that risk be? Dude, this is looking juicy. We just got a technical breakout. 85. My risk would be 41. So I'm risking 40 points, which is, it's 10:02. You know what? I'm waiting. Feels chasey. I was about to do it. And look at that rip. And here we go. Yep, it got that break. You know what? If it goes without me, and I miss my trade of the day, but I'm attempting to be disciplined. I want to go long, but I would prefer a bit of a pullback before I go long. I really don't want to chase it. And if you're already in a position, congrats to you, because it is legit bullish. Mag 7's popping. SPY is popping. All the EMAs are bullish on ES and on NQ. And we're getting technical support, technical breakout. We ran up to the next level, which was called out before the market even opened. So no surprise we had to wait there. And then we popped off of it. My next level is 59.50. It's that easy. It's honestly that simple of a situation. It feels chasey, and I don't want to be the person chasing. It'd be one thing if I got in exactly at 952 and risked the 951 low, but alas, I didn't do it. So I'm just not going to chase, even though I have a feeling that would have probably paid very nice money. I want to go for one perfect trade today. I will cry less in the shower this evening if I just, at the end of the day, know I made one perfect trade, not one chasey trade that ends up going my way. You know? I mean, it looks good. I'm there with you. If you got in early this morning, I would keep riding it. But just not my risk reward opportunity to necessarily strike at the moment. Tesla coin, Palantir, Apple swinging back around. Meta is trying to swing back. Fucking Meta. Meta just cost me a lot of money on Monday to the tune of $15,000 to $20,000, I think. Is Meta really going to be screwing me like this? Ah, son of a bitch. Meta. Hang on. Let's go look at the daily chart of everything. So, okay, the SPY got hit, fighting back. Now it's back above the opening value. So it got wicked. And if we run into a bit resistance, that could be obviously problematic. But let's see. As of right now, we are still below the closing value. Pretty much the same situation in the NASDAQ upside gap fill. We're getting that follow through. Microsoft does not care, did not get the memo. Daily chart looks strong. Netflix got hit, fighting back. I like that. Nvidia got hit, fighting back. Tesla got hit, fighting back. Upside gap fill to 342.33. Watch that. Coin seemingly didn't get the memo. Palantir, like the others, got hit, fighting back. Apple, same thing. It's kind of in the middle of its range, maybe slightly weaker on the daily chart. Meta didn't even break the low from Friday. Remember, they announced that they are stalling the, I guess, public release of their whatever model, their machine learning. What's it called? Behemoth or something like that. ASML still trending down a couple days. AVGO fighting back like no other. That's a strong bounce back. Amazon also. So basically the TLDR here is things gap down lower and pretty much the entire cohort is attempting to fight back. Ripple actually showing awkward weakness. Solana showing weakness. Texas Roadhouse showing strength. No one should be surprised. TLT bonds taking a hit from the Moody's downgrade. So, okay, across the board, the most popular stocks that I see you guys talking about, the story is this, is they all gap down and they are bouncing back. It's an AI llama. It's called Llama? That's a silly name. I like my name better. Behemoth. Nvidia, Tesla's trying to pop. I would imagine if Tesla goes green, makes up 10 points. Imagine if Netflix goes green. That's only $5. Actually, Netflix really easily could go green. Same thing with Nvidia. So Microsoft is already green. I'm looking for Nvidia to push green. I'm looking for Netflix to push green. And it has some distance to go, but we've seen crazy stuff in Tesla. That could definitely go green. Apple, maybe. Meta is actually up there as well. Meta could be pushing green after getting hit pretty decently on Friday. Oh, unfortunately, when I wanted to go long, it probably would have paid. When I was thinking about going long, chasing at 80, I would be up about 15 points right now. I'd be up $300. It would have come back and hit basically my break even. So coulda, woulda, shoulda. I'm just trying to not do stupid stuff. I feel like I've been trading very, very stupidly on futures lately. My options trading has actually really rebounded nicely, and we're crushing it over on the options side. Well, something just happened. We just got to pop somewhere. There had to be some piece of news. What just came out? Something happened, folks. Everything just got to pop at the awkward 10:06. What in the world happened at 10:06? Does anyone have any... I'm not seeing any news come across quite yet. We're in that awkward delay period, but everything awkwardly at 10:06 just got a pop. Just got a pop in unison, and I would appreciate it if anyone got the news. If anyone got the news. I'm not seeing anything come across the line quite yet, but what I am seeing is that actually a Piper did fire. Piper did fire. What are we? All right. If you are in the Discord, Piper fired. If you are in the Discord, Piper did in fact fire. So that is up there. All right, let's reduce this all to the 3 minute. Let's see what the overall situation is. What's the sitch, Kim Possible? All right, higher highs, higher lows. So the price structure is higher highs, higher low. It's bullish. Price momentum, bullish, 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 bullish. Options flow, bullish. Something got a big bid on the Mag 7. Let's find out which that one was. Was it Apple? A little bit. Was it Microsoft? No. Was it Nvidia? Kind of, a little. Meta, even less. Tesla, a little. So it doesn't look like there was one major play that got advantaged here. It was just some of the Mag 7. Nvidia, a little bit of a pop. Apple, more of a pop. Microsoft, nope, really nothing there. Tesla, a little. Was it Google? I doubt it was Google. Google, holy shit, it was Google. Google got a big pop in options right there. Longer dated calls being purchased. Longer dated calls being purchased on old Google. I'm not a fan of playing Google just because I don't like being involved in a stock that has so many lawsuits that you never know how a judge is going to rule. So for me, the risk reward. Oh, Amazon. You guys are, I forgot to check Amazon. Amazon. Yes, good call out. Okay, so Amazon got a pop. Apple got a pop. Nvidia got a pop. Tesla got a bit of a pop. Apple, not so much. Microsoft, not so much. I would say, yeah, no, that's looking pretty decent there on Amazon. Okay, we have about, like I said, this is my target, 59.50. I'll double check to see if the structure has changed and if we have any breathing room above. So hold tight on that. Not much. Maybe 59, 60, 65. So maybe instead of the ceiling being here, it's closer to like 66. Maybe it's like moved up by about 10 points. But I'm not seeing a continuation of bets coming in higher and higher and higher the way they were this morning. The aggression, as in the strike level of the plays, the calls being played, it's elevated slightly, maybe to the tune from 59.50, maybe by about 10 to 15 points, but it's not like a massive amount are coming in at 75 or 6,000 as of now. Of course, with every bar that passes, new bets are coming in. But just to give you a breakdown of like what's currently happening, I'm not seeing much more. This is still kind of my terminus of the day, somewhere up in this region, just like this is kind of my low of the day. I wouldn't be surprised if we pull back, base, pop up to this, and then for the remainder of the day, we're just kind of choppy and sideways. I'm liking Tesla popping. I'm definitely liking double Tesla popping. I'm liking that Netflix is almost back to break even. I'm liking that Microsoft is holding green. Nvidia is almost green. Broadcom is green. Amazon is green. Apple's down by 2%. Palantir is down by 2%. Meta is almost green. Another one to watch. So, man, across the board, things are fighting back with a vengeance. And I think what we're going to do is get to a lot of these red to green tests. And then we're going to stall out, have a really, really choppy lunch. And then from there, we're going to have to come back and see the overall structure to see if we have a chance of continuation. But as of right now, to be specifically clear, I'm not seeing many bets come in above this region. This region right here, that's what the bulls are betting on. And if we don't have fresh dominant bets coming in going higher, we're not going to go higher. So not only is there technical structural resistance here, but even the live bets on the options market are not coming in above it. They're pretty much here. So my game plan as of now, hang on, let me double check how the flow is looking. That's looking good. We popped, we pulled back. I am looking for a pullback to go long into, and then I want to play it up to this level. That is your boy's plan. I have not played the futures market yet today. I did throw on some options trade. That's for everyone in the Discord. They know what's going on. They also know that Piper fired off, so that's awesome. But I've made some option plays. I have not made any futures plays right here. I just didn't want to chase, and I didn't see a reasonable pullback. Now, just to shout this out, if you played this breakout here at 10:01, that's a solid technical play. I'm not the biggest fan of playing right at 10 because sometimes we see malarkey at 10:03, 10:05, 10:07. But if you had the discipline to go long at 66 and risk 41, that's only 25 points of risk. And obviously the risk reward played out very much in your favor. So if you played that, it's not my style because I've been burned way too much playing right at 10. But if you aren't really a time-based trading and you're just looking, hey, is that a good technical setup? Yeah, you're riding the trend. You had a succession of lower highs. You played the continuation of the overall trend. You had well-defined risk. I really don't mind that long whatsoever. So for anyone in here, and I bet some of you in here did take that trade, it's a little bit chasey. You're pretty close to the market high, but I don't mind it as long as you really respected that risk. And then on the breakout and on this pullback, and then here at 10:05, as long as at 10:05 you moved your stop up to break even, I actually really like that play. So once again, not necessarily my personal bread and butter, my bread and butter. But if you took that, hey, I understand it. Nvidia's pump. Yeah, everything's bottom left, top right. Let's see if we can keep the train on the tracks today. There is definitely a little bit of profit taking going on right here. Starting at 10:07, we see some call profit taking. Calls are being sold. And then starting at 10:10, some puts are being bought, but not much. The overall put line is not moving by much. We saw this big pop right at 10:07. That was the Amazon, Apple bullshit. And right now, like maybe we're going to start to recover. I don't know. Your guess is as good as mine. I see the Mag 7, that big pop, taking a bit of a breather right now. The NASDAQ, same thing, popped from 10:01 to 10:10. Right now, once again, taking a little bit of a breather. I don't mind it. If anything, I wouldn't mind a little bit of a pullback just so I can minimize my risk going long myself. I've given you my trading plans, and my hand might just be getting forced somewhat soon here. I might be forced to play off this low. All right, I'm doing it right here. Well-defined risk. That's it. I don't know where it's going to go. We could easily double top here. Like I explained to all of you, I wanted a deeper pullback, but this might be all the market gives us. I don't know if I'm right or if I'm wrong. All I can tell you is I have 20 points of risk. I have 25 points of risk. That's a low risk trade for double the reward. I don't know what the market has in store for us today. I don't have a crystal ball. I do have a tarot card set that tells me we're going to moon. I know that for me to hit this return, that would be most likely less than the SPX hitting my next level, major level of resistance. But I'm just trying to stick to a plan. I wanted to wait for a pullback. The pullback seemed to fade, and I went long into it. And all I can tell you is I have well-defined risk. I don't know what's going on. We went below this EMA. We popped above it, and I'm going to be riding this to the best of my ability. I'm long at 35. What is 35, 40, 60? At 60, I will set my stop to break even. As soon as we hit 60, right there. As soon as we hit that, I'll move my stop to break even, and then it's a lotto play. No risk, no reward. Or no risk, potential reward, which is my favorite type of trading. And we're going to see. Can we take this out? Sanity check. Bullish. Nasdaq is taking off. Mag 7 popped again. SPY is also picking back up. Things are seemingly breaking in my favor. Like I said, I'm looking for this test of 50. I think this might be our kill zone today, folks. Up in here, unless I see large bets coming in above. And as of right now, okay, they're trending up a little bit. Instead of being at 60, now they're focusing seemingly on a little bit more of 70, but we don't have the most clarity on the situation. So let me check one more service I have for all of you. This is going to be tough to break. If we do break it, there might be another 20 to 25-ish points in it, but I cannot stress this enough. Do not be surprised if we get rejected here and then are forced to kind of reconsider if we're consolidating or not. Please pay attention to 59.50. I cannot articulate this enough. This is a very important test. I definitely wouldn't be going long at this point. Obviously, I chose to go long here because I had well-defined risk and I might be able to ride it up. Buying it at resistance is generally in the long term a loser's game. All right, we just hit that. All right, I don't know. Might stop me out, might not stop me out. I have no idea. I just know I'm not going to lose money on this. It sucks because I'm at the point where I have to consider my unrealized drawdown. So if it tags me out, it is basically eating up some of my buffer. So I'm hoping I could just get lucky here. But you know what's worse than eating up your buffer is eating up your buffer. And on top of that, losing money, i.e. eating up more of your buffer. This is just a pain in the ass of sim-funded trading that you have to deal with at first. And all I could tell you is the die are in the air. I might get lucky. I might get unlucky. It might come back and hit me out. But guess what? If it comes back and tags me, I could always trade that again. And it does look like, unfortunately, it's coming back to hunt me right now. Obviously, I wish I got in a little bit closer to 25 right on this bar. I think that would have been obviously a better entry. But I'm more so, I don't know. I'm trying to be smart and worry about my downside protection. And this is eating into my buffer. And it does theoretically make my next trade that much more difficult because I lost about $500 of buffer. But I'm trying to just remind myself that what's worse than eating into your buffer is eating into your buffer and also eating into your account value. And this is only something you have to consider if you are within that 2.5K buffer on a 50K account. So I don't know. This does look like it's about to hit me, but it is what it is. My trade is placed. I have my risk. I have my reward, and we're going to see which way the chips fall. And it's going to be frustrating because there's a good chance it comes and quickly tags me, and then it goes up here anyway. And if I just took on a risk, I would have been fine. But there's that off chance, even if there's a 5% chance that no, it gets rejected here in vomits. I just don't want to be involved in that and blow out my account. So it is what it is, and the die are in the air, and we're going to see how it goes. But as you can see, I'm not moving it. There's my stop. There's my reward. There's my stop. There's my reward. Like I said, when it got here, that was a decent chunk in my favor, so I moved my stop to break even. I figured when it went more than halfway to my profit target on this particular trade, why risk any money? And we're going to have to go. We're going. What are the probabilities of reversals at the large move if it gets rejected at 59.50? I don't actually know how you would possibly model that because not necessarily every trader in the world is going to be identifying that as a key level. So I would say it goes back to normal market dynamics of 50-50. 50-50. But remember, if you have odds of 50-50, that's not necessarily good or bad. 50-50 is good or bad depending on your risk to reward ratio at that moment in time. So if you have a 50-50 chance and your reward is 10 and your risk is 1, well, that's a bet worthwhile taking. If you have a 50-50 chance and your risk is 10 and your reward is 1, well, why would you be taking that bet? So looking at the odds of a situation isn't the whole story. It's half the story. And to know if that is by definition good or bad, as in favorable or not favorable for you as a trader, you have to know the other part of the story. Just knowing the odds of a situation without the risk reward, it's actually useless. And same thing, just knowing the risk and reward without knowing the odds is also useless. For example, let's say you have a 10-to-1 reward to risk, as in super favorable. But what if the odds of that hitting are only 1%? Well, now there's no longer a point to it. So you need both sides of this story to know if what you're doing is a good or a bad decision, as in a positive EV, as in positive expected value, or a negative EV, a negative expected value situation. It is good to know the odds. It is good to know the risk reward, but they're only good and useful if you also know the other one. I just got tagged for break even. All right, stop me out for break-in. I didn't, I guess I technically lost commission values and whatever, it happens. I know institutional traders, all they care about is EV. Well, that's not institutional. That's how you literally make money. Dr. J, I'm a little confused. That's literally the only way you make money. If you don't have positive EV, then you're not going to win. If you have negative EV, mathematically, it's impossible for you to win in this game. I don't know. That's literally any positive trader has positive expected EV. EV is expected value. If you have a negative EV, it means you're going to lose money in the long run. If you have positive EV, you're going to win money in the long run. Yeah, when we sports bet, we just say EV. That's literally anything in this game of numbers and betting and trading and gambling. It's all the casino. Do you have EV, positive EV, or negative EV? For example, if you're playing blackjack, generically, you have negative EV. The longer you play, the more likely it is for you to lose money. If you're counting cards, now you have positive EV. In sports betting, do you have an edge or not an edge? He's obsessed though. That's why he is successful. That's literally the criteria to be successful. In trading, you either have positive EV or negative EV. In gambling, in this, that's the only way to win at this game. I wouldn't be saying it as it's a profound thing that he cares about the one thing that means you're successful in this or not. If you have positive EV, you make money. If you have negative EV, you lose money. It's honestly that simple. LOL, not many retail know that. Well, that's why 95% of retail traders lose money, which is actually exactly why on both Rumble and YouTube, Matt Kohrs 95. I just posted this video. Why is this not coming up? I can never find my own other channel, which is crazy. What we're talking about right now is very well explained in this video. It just got posted on Friday. Right here, we just posted it on the secondary channel. Why 95% of traders fail? How to be a profitable trader. In this video, I give a more useful explanation of a breakdown of actually how to win at this game, and it ties back to this conversation of positive EV. If you want positive EV, you have to have not only in the long run, a profitable trading system. You need to place your bet sizes accordingly to overcome variance. And then the third thing is just sticking to it. But if you want more of a useful, thorough breakdown of what that is and what that isn't, highly recommend you check out this video, Why 95% of Traders Fail, How to Be a Profitable Trader. Once again, this video is posted on both YouTube and on Rumble. The content is perfectly mirrored. So if you have one particular platform that you like and are not a fan of the other, you are all good to go. Don't worry about it because it is there. I identify as 95%. You know what? I think a lot of us do. A lot of us do. All right, we're seeing a little bit of a pullback, and in reality, I don't mind it. I was worried that this might get going here at 9:15 without me, which is why I took that trade. Obviously, no harm, no foul. I got out for break even. Obviously, the loss of $10 is just due to commissions. But now this gives me an interesting opportunity to actually create a position with, once again, better EV. That is exactly what I am looking for right now. That is exactly what actually this setup is getting to. I really, really like it. I just need to be patient. Let's zoom in a little bit here. Obviously, bullish on the day. Now we have lower highs, lower lows, broke that low. I was in at 35, so I'd be down. Instead of being break even, I would be down by $600 per account, which, remember, this pullback was by about 25 points. So the way these measure you for blowing out, it's not from your realized high, it's from your unrealized high. So the drawdown to blow out your accounts would have been based off this peak right here. So I would have already eaten into almost half of my drawdown, which is exactly why I protected myself. Now, that is exactly what I didn't do on Friday, and that's exactly why I had to restart my accounts on Friday and now actually start trading them again today, because I was being a dumbass with my head so far up my ass I could have seen my own brain. So we're seeing a pullback. I really like this trade right here. If we can pull back to 25 and then all of a sudden we see a base in delta, it flattens out and starts to curl back up. Same thing on the SPY. We kind of puke all the way down to this level. We hit this technical level. We see the options delta balance out, curl back up. That is a position that I would really like to be bullish into. So phase one is drop another 5 to 6 points right to this level. Phase two is maybe a little bit of an overshoot, but more so I want to see price to go sideways, and simultaneously I want to see options delta flow go sideways. And then from there, I want to see price pick up simultaneously with options picking up. And then that's my opportunity to try to play this up to 59.50. That is the play I'm looking for. I'm telling you guys, like, I'm giving it away. That's exactly what I'm looking for. Is this 0DT closing or puts being bought as well? Those aren't opposites. Is this 0DTEs closing or are puts being bought as well? If you buy to open or buy to close, it has the same impact on delta. You're either opening and adding delta, or you're opening to close. Like buy to open or buy to close, or sell to open, sell to close. Either of those, they have the same mathematical impact on delta. Obviously, the open interest is different, and I would say sentiment-wise, you can learn something new. I would agree sentiment-wise of, are you buying to open a bunch of calls? Because that is not only bullish because you're buying calls, but it also tells me it's a new position. You're expanding open interest. It tells me there's a bit of aggression in there. Okay, cool. Same thing. If you buy to close calls, you're still like supporting delta higher, but it also tells me that you're just removing resistance above rather than betting on it going higher. So I think depending on if open interest is expanding or not, you can take a different piece of information from it. But buying regardless, if you buy calls to open or buy calls to close, they both improve the overall delta reading. It doesn't matter if opening or closing. I would take a secondary piece of information from it. Obviously, like I want to know, like it tells me a little bit a difference of the gradient. Buying to open calls, that's bullish. Like you're legit betting on it going up. Buying to close tells me you're removing resistance above, which is by definition bullish, but I would say it's less aggressive, if that makes sense. Okay, what do we have? What do we have? All right. Well, while we're waiting to see if this does or doesn't play out, a very quick and special shout out to Public. Public is today's stream's partner, and that's exactly where I have $400,000 of my own money. This is my favorite place to trade options. If you are an options trader, I don't know why you would not be on this platform. It is the only brokerage that I know of that gives you a rebate right here. Trade options, earn rebates. Name another brokerage that does this. If you are an option trader, you're kind of a crazy person, in my humble opinion, to not be here. Free to download, free to sign up, no commission fees, no per contract fees. You earn your rebate every single time you trade an option. Doesn't matter if it's buying or selling a call. Doesn't matter if it's buying or selling a put. You earn a rebate. Check this out. If you buy 10 calls at $1, and then sell 10 calls at $1. On most brokerages, you're going to be net down because of fees. On Public, if you buy these calls at $1 and sell them at $1, you actually made money because of the rebate. Even though you bought them and sold them at the exact same value, you're going to actually be net ahead because of the rebate. Beyond that, they obviously have equities trading. There's no payment for order flow. They have crypto trading. They have bond trading. They have high yield accounts, they have retirement accounts. This is a one-stop shop for pretty much what you need, maybe excluding futures. So definitely check that out. Pinned to the top of chat, in the description of the video. Make sure you use that link because you're going to start off at a higher rebate tier. And then on top of all of that, they just came out with a brand new announcement. Check this out right here. Generated assets. Now you can turn any index to an investable index. So the TLDR here is you can create your own indexes. So if you want to be involved in an index that is exclusively EVs and semiconductors with a low PE ratio, you put that in and it will construct it for you, and you can see how it would have historically played out. They literally just announced this on Friday. They just announced it. It is available to everyone on Public. You can create your own little buckets of stocks as easily as literally just typing it in. They literally just announced it. So whatever, I guess, crazy idea you have, whatever like particular quarter of the market you want to be involved in, you can create your own basket right now. It is awesome. I was playing with it all weekend. I highly recommend you guys check it out. Once again, this is all on Public, all available to you. So whatever, like I said, corner of the market, you're like, I want to be involved in that one, you can easily create it. It's as easy as just like talking to your computer. So check that out. If you want to see the video, if you want to see more of the information, I do believe that their co-CEO, Yannick, where was it? Right here.
If you're into investing, you'll probably have those moments when you think, someone should really create a fund tracking Formula One sponsors, or Maybe there should be a strategy based on the rise of nicotine alternatives. Or even stuff like it could be cool to invest in companies with flat org charts. These ideas pop up all the time. But until now, they've stayed just that, ideas. Today, we're happy to announce you can now turn your ideas into investable assets. We call it Generated Assets, a new AI-powered product from Public. It all starts with a prompt. For example, what if you can invest in something that tracks CEOs who have podcasts? Let's try that one. Our AI will take whatever you describe and help you build a custom asset that fits your unique vision, displaying why it selected specific stocks or ETFs. Then
I like the fact that it shows the performance of it. That's so cool to me.
S&P 500. You can even fine-tune what's included, adjust the weightings, and share your asset with the rest of the world. While we're not recommending any specific stocks or ETFs, we are recommending you try Generated Assets. It's an AI that can bridge the gap between your ideas and your investments. And we can't wait to see what they'll create.
Order submitted.
Well, order submitted. Anyway, just to wrap this up, they just announced it. It's brand new. It's on Public. They are the partner of today's show. Highly recommend you guys check it out. Like I said, free to download, free to sign up, no commission fees, no per contract fees. I don't know of a brokerage that treats their clientele better than Public does. Like I said, you can find it. Use that link because you're going to start out at a higher rebate tier. Shout out to Public. All right, we actually don't need that. Here's a quick look at the flow. Is this working out? All right, we didn't necessarily get the dip to 25. We dipped to 29. Remember what I was saying, though? I want to see a dip. I want to see almost like a fake out breakdown. We base and then we pop. I want to see, I'd like the Mag 7 to curl back up a bit more. Remember how I was saying we want to see price and delta base? Well, we got the basing, but as of this exact moment, I'm not really seeing the Mag 7 curl. I'm seeing the SPY curl back up, but obviously the eventual target is right here, 50. Folks, I articulated this entire trade to you. Now, I don't know how it's going to play out, and that comes down to you and your risk reward management. But here's my pitch to all of you on it. What would this be? If you bought the breakout, you have that risk and you have this reward. So what is it? A risk reward of 1.56. Not the best, not the worst. You're risking the recent low and you're risking a new high, but more so if you're targeting a key technical level and a key options level. And if you take these, once again, positive EV trades time and time again, that's how you're net profitable in the long run. The trick here is you have to bet in a way that you realize variance can still hit you. You have to be humble enough to understand that you can't be putting the house on every single bet, because even with the best setups, it's not going to work 100% of the time. So you have to bet small enough relative to your overall account, relative to your overall situation, understanding that sometimes you're just going to get unlucky and variance is coming for you. But the point of being a successful trader in the long run is taking these high odds setups time and time and time again. And this is a high odds setup. We have a better than not chance, over a 50% chance of hitting 59.50 today. A better than 50% chance. And then on top of that, we are looking for more reward than we are risk. Now, the trick here, once again, coming back to variance, is this the exact time to do it? Who knows? Maybe there's a better setup in 10 minutes, and that's possible, and that's where variance is coming into this particular conversation. But all we can base these trades off of are what data do we have right now? And what we have right now is we have a potential a fake out breakdown lower. We had this low at 10.14. We made a fresh low. We didn't hit 59.25. In a weird way, I would have preferred that we hit it and bounce right off of it. Regardless, this is now a fresh higher low relative to what we saw, I suppose, before 10.01. We seemingly are bouncing off of that. And what would make this a bit stronger is if the Mag 7 curled harder, but the SPY is actually curling to the upside. So it comes down to this, is you have to be humble enough to not know where the next bar is going to be. I know a lot of people are out there trying to predict the next bar is green, the next bar is red, and they don't know their ass from a hole in the ground. But what you can do is say, I don't know the next bar, but I do know the overall trend right here, bullish, 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 recovering ideally bullish, recovering ideally bullish. So the options market leaves a little bit to be desired. So we do know price momentum is bullish and we know price trend is bullish. We're seeing higher highs and we're seeing higher lows. So we'll say it's about 2 out of the 3 major things, but more ideally, wrong screen. More ideally is the fact, and I cannot drive this point home, is you have well-defined risk. That is your risk. You know if you're right, you know if you're wrong. If it breaches that low, okay, you're wrong. And maybe you want to take another shot at it later on in the day. Or if you're right, if it goes a little bit in your favor, well, maybe that's when you start moving your stop up to break even and seeing if you have a runner-esque type of a situation. But this idea of trying to predict the next bar, it is stupid. What active trading is how good are you at managing the risk to reward situation? And then maybe variance is on your side and that's a winning trade. But the best traders in the world, they're not really traders. If anything, they are risk managers. That's what they do. They're not the best predictors. They're not some Harry Potter wizard who somehow knows the next bar. Yes, you can put together certain pieces of the puzzle to get idea of turning points. For example, I called out 5925 this morning as a point of rejection or like a point of interest. And that was before the market opened. We ripped to it. And then from 9:48 until 10:01 for the better part of 13 minutes, we just danced around it. How did I know that? This wasn't Harry Potter level magic. This was simply because I saw that it was a huge open interest level. And I knew that market participants and market makers were going to have to react to it. And it just so happens that they reacted by stopping the momentum, and then eventually there was enough bullishness to actually get us to break out. So that's all it is. Yeah, you can maybe once in a while have these really shrewd call outs of, hey, highs and lows, and you probably base it off of some version of liquidity or open interest or historic rejection and support. Yeah, you could do that. But more important than that is because, hey, things are resistance and support until they're not. More important than that is when you get in a trade, you have this trade thesis, be humble enough to know that whether you go up or down, you're gonna have 50-50 accuracy. So the way you win in a 50-50 game in the long run is minimizing your risk and really optimizing your reward. It's very, very difficult to be a net profitable trader in 50-50 situations where you're taking baby rewards and taking on massive risk. It just, you have to have much, much, much more than a 50% hit rate for that to be useful. So for this, I'm long on it. And I'm giving myself a 50-50 shot, the same way I did up here, the same way where I got stopped out at break even. But that's the beauty of it. If you can get fortunate enough where, hang on, I'm actually thinking right now, should I be moving my stop back up to break even? I'm going to give it one more second to breathe. I'm watching this rejection point. This is the point where I'd go to break even right here, where we were touching this downsloping trend line. That right here at 1025, which seems to be 21,442. If we can tag that, I will be moving my stop to break even. I just want to take out this recent high because in my book, the way I view the market, and I'm not saying this is the end all be all, but the way I view it is if we're taking out recent highs, well, that inherently means the bulls have a bit of control. So if the bulls are regaining control in this short time period, there's no point in me any longer risking money. So that's what I'm looking for, is for us to take out this roughly the 1025 high. And then right now, my profit target is set at the intraday high. Once again, just like a key level, a key level. I do wish this dip was a bit more, but I'm basically playing it off of this fake out breakdown. And I'm looking for the push to 59.50, which would be a fresh high on SPX, but I'm playing it a little bit more conservatively. And I'm only looking to play it to the high of the day, which is actually 62. So I'm going to move this up slightly to 62. I'm undershooting it by, I believe, a tick. And what's nice about moving it 2 more points is it'll pay for the commissions on both trades. So I should be net ahead by about 25K on the day if that hits. Oh, but part of me wants to move my stop to break even like right now. I'm just going to do it. Fuck it, dude. Fuck it. Win in Rome. So no risk. Either I make no money as I did on the first trade and I get stopped out, or I do make money and it was all worth it. So I don't know what to tell you. I played that breakout. I explained it to you perfectly way before it happened. I Notre Dame'd the entire situation, and now we're just going to see if I'm going to get lucky or unlucky. I'm not actually the biggest fan from a technical perspective of what I just did because my stop is above these recent wicks. So if basically I'm betting we just continue from here with no pullback, which what are the odds of that? I have no clue. All I know is that I'm protecting my downside. And I just don't want to risk money because once again, this pop and also the pop that I had earlier, that unrealized gain technically is eating into my buffer as of now. You no longer have to worry about that when you're past 2.5K, but these accounts are fresh as of today. So even though I'm eating into my buffer, I'd rather not eat into my buffer and have a loser. And this is seemingly going the way as of trade one, where I'm on the right side of history, but I'm just playing it a little bit too tight. Yeah.
Order canceled.
Well, technically I got into the green. So, well, actually, no, not with this. Now I'm down by $5 on each account. Well, that's a bit of a bummer. I don't like doing it this way, but I also don't have the freedom to let it breathe at this moment. The way I really like to trade is to be able to risk whatever 50 to 100 points and let my trades breathe, because the chance of you getting in at the exact perfect time, it's kind of slim to fucking none. It kind of is. So like this is a foreign way for me to trade. I'm not the biggest fan of trading this way. Unfortunately, it's just a part of it. And we might be finding support right here. It's just how you have to grow these accounts initially. And like I said, it's a huge pain in the ass, but it just is what it is. It's the math of the situation, and I'm not a fan of it. This is not how I would normally day trade my own account. It just isn't, but I guess the rules of the road are the rules of the road, and I have to try to play it accordingly to not blow the fuck out. And I don't enjoy it. It's actually probably the most painful aspect of all of these accounts. Fuck, and then it gets going right there. Do I want to take this trend line breakout trade? It just enough to wick me out, and that's how it goes, of course. Let me check the flow. So the Mag 7's now getting hit, but the SPY is curling up, and we are still about 10 points to go. We still have about 9.5 points to go. That'll be 8 or 9 points. We didn't dip as far as I'd like. I don't know why the Mag 7's getting hit right there. The NASDAQ is actually kind of moving, though. The NASDAQ just made that fresh high. SPY is petering out a little bit. The SPY is running into a bit of issues at that trend line. And we're right back down to the 1 minute 50 EMA. We're not getting the follow through that the bulls want, and it's probably somewhat to do with the fact that the Mag 7 took a pretty healthy hit starting at 10.24. So the fact that I got out for break even, I don't mind it because it didn't cost me anything. Basically just I'm trying to trade in a way where I get a lot of freebie trades, and it is what it is. It is what it is. The market's not always going to give you what you like. And I, over the weekend, basically viciously, verbally berated myself for just trading like a dumbass on these futures accounts, trading like a grade A dumbass. So the opportunity is going to be there. In fact, when it is there, it's going to be screaming in your face that it's there. So sometimes you have to take a shot. And my biggest piece of advice, or where I found success, is where I'm just extremely like into tracking what my current risk is. That's the way to do it. If you're the person just like absurdly concerned with your risk, you're going to survive. What was this? If Apex can just let us trade without consistency rule after the first 8 days, that would be for the best. For now, take profit, in my opinion, takes first place. It depends on what you care about. I mean, obviously that's a personal opinion, but on Apex, you can pass their eval in 1 day and be trading funded the next day. On Take Profit Trader, you need to trade for 5 days. So it's 6 to 1, like half dozen to the other. The evals are cheaper on Apex, but the upgrade fee in total is a bit more expensive. So the eval process of Take Profit is more difficult on a relative basis, but then when you're funded, that process is easier on Take Profit. So it depends on which side you're weighing more. I would say I use them both because I take advantages of the easy evals on Apex, and then I take advantages of the better payout system on Take Profit, which is why I use both. So I would very much be careful of saying that one is like clearly the better one, because it depends on you and then trader and what you put more weight on. I would say you have to be very, very careful about that. Very careful about that. All right. We're now kind of creating this downward sloping trend line. We couldn't get the follow through on the SPY or the Qs. We're seeing a similar situation in the Mag 7. Right here was when I saw it curling up, but the curling up failed and started to break apart at 1042. So be careful there. And even now the SPY is starting to break apart. We had a nice push up until about 1020. And now the delta is getting hit. The delta is getting hit. All right, let's see if we flush these lows, the recent lows at 1025. Use TradeStation and Apex just submitted for payout. This AM broke the 30% rule on the trade, so we will see what happens. Well, if you broke it, they're not going to approve it. Topset has legit rules, but they only allow 5 accounts. I'm not a fan of Topset because of the daily loss limit rule. I think daily loss limit rules are predatory. And I don't think the average retail trader understands that it doesn't make it linearly more difficult to be successful. It makes it exponentially more difficult to be successful. I am not a fan of any firm that has daily loss limit rules. Now, if you want to self-impose it, that's a completely different story, and maybe that's just best for you and your trading. But for a broker to actually turn you off, especially in high vol circumstances, I'm just not a fan of it. So I cannot be supportive of a prop firm with daily loss limit rules. And I guess I add a little caveat on there, unless they have other rules that kind of balance out that drawdown. So if for some reason they have amazing other rules and like you just have to take the hit of the daily loss limit, I kind of get it there. But if anything, I don't see Top Step being that much more special. Yeah, I think they removed those, but I might be thinking only about their X platform. Yeah, I think they did remove it for their specific platform, but that platform sucks ass. Have you ever tried to use it? Imagine trying to compare that to something such as, I don't know, for example, NinjaTrader or even TradeAvate at a certain point, TradeStation. It sucks. It's horrible. So I guess maybe I'd change my opinion if they improve the platform, but it's a very, very clunky platform. Yeah, TopStep no longer does that. No, it only does not do it if you're using their specific platform, which obviously is like just attempting to force people to use their platform. And their platform sucks. Like, whatever. I'll change my opinion on it if they improve the platform. It's not that hard. Like, yeah, I'm more than willing to be like, yeah, I'll give them a shot and whatever, get rid of the daily loss limit, but just have a better platform. Why do you look at SPY flow when you say big players trade SPX? I don't look at SPY flow. I actually kind of like TopSecX. Well, if you like it, use it. Whatever. If you like it and you're making money and you're having a good time, dude, don't let me get in the way of it. I don't know. My personal opinion is that I don't like it and I've used it. So I don't use it because I don't like it. If you like it, dude, have at it. Have at it. I'm not going to stop you. I am a fan of, if you find a particular platform or system that is good for you and you're making money and you're having a good time, I am not the person to get in the way. Like, hey, dude, have at it. Don't let someone else's opinion. If things are working for you, if they are trending in a positive direction, dude, you shouldn't give a shit about what anyone says. Ooh, we're getting to an interesting situation right here. We're getting to an interesting situation right here. What would my, hang on, let me figure out what my max risk would be. Hang on, let me check the flow really quick. Mag 7 potentially bottoming, SPY.
Order submitted.
All right, we're going to see how this one goes. What time is it? 10:53. So I'm still in a good trading time. All right, basically, I'm just trying to play this W setup. We puked. We bounced. We puked to the exact same level. We just recovered above the EMA, and we just put in another higher low relative to the previous low. So I'm basically playing like this little fresh high right here. I'm hoping that this EMA holds. If I wanted to be really, really aggressive, I could actually probably move my stop up to this recent swing low. I might give it a little bit of room to breathe just because I feel like the recent trades, that's been one of my issues, is I've been like a little bit too tight with the risk. But I like the EMA recover. I like the overall double bottom, and I like this recent higher low. And why I'm bullishly biased is because overall bullish. The Mag 7, I saw this bottoming. Maybe it starts to curl up. Same thing on the SPY. I saw bottoming, maybe starting to curl up. The issue here is you don't know if that new curling up, that new bullish delta trend is going to hold. Could be a fake out. Might be, might not be. Those are the things that are outside of my control. What's in my control is just my risk. And obviously, I'm just risking this recent low and just looking to see if I could get in before this trend line break. It's that simple. I'm trying to trade with the overall trend of the day, and we're going to see how it's going to go. I should also note that we're right at 21,400, which I'm hoping is just technical, psychological support as well on the NQ contract. But we're going for it. What I want to do is pretty much the same thing that I've done on those first two trades, is as soon as I feel like we're reasonably in my favor, I just want to take all risk off the table and move my stop to break even. And then if I catch a runner, I catch a runner. I'm going fishing. If I lose a piece of bait, as in the commission fees, I lose the commission fees. It's like you only have to catch a runner every so often to be net profitable if you are very, very careful with your risk. Not everyone likes to trade that way, but on these futures accounts, these day trading futures accounts, it's that style that it's where I found success. It's basically get in, minimize your risk, get your measured smaller profit, and then just get in and get out and move on with your life. Bullish falling wedge, maybe, kind of, but I don't know. I think intraday technicals are much more of an art than an actual science. Get out earlier. Don't trust hitting your stop loss before something bad happens. Get out ahead. Don't agree with that whatsoever. I think you're literally, at that point, you're just changing the rules of your system. And I would never, ever be supportive of you thinking that you're smarter than your system. In fact, in the long run, when I think I'm doing something better for my system, once in a while it works. But in the aggregate, it's for me just better to listen to the system. The system is back tested, and it is based off of empirical, measurable data. And the chance of me just having this gut feel and this read on the market, it's stupid. So this idea of get out earlier, as in you're literally campaigning for breaking your system and saying you know more than your system. That is a perfect way to lose money. It is a perfect way to lose money. So obviously I would never be supportive of that. I find too many people, I see it all the time in chat. I see it all the time on the Twitter, YouTube, Rumble, even in the Discord. People just having gut feels. What the fuck does that mean? I just, a feeling it goes up. Dude, none of us are good enough to be net profitable in the long term off our gut feels. Folks, this is a game of math. This is a game of statistics. This is a game of risk management. It has nothing to do with gut feels. That's just such a fucking idiotic way to, well, not idiotic. It is a financially adverse way to approach the market, thus making it idiotic, especially if you keep doing it time and time again. I understand if you're a new trader and you're trying to understand what this is, but if you've been here for a bit, if you've walked a couple times around the block and understand this a little bit more and more and more, you have enough anecdotal evidence to know that you being emotional and you trading off your gut is a telltale way that you know you're going to lose money. It is. It's just, you set up a system, you test it. If it's not good, you improve it. And you just keep working on it. But you don't know if you have a good system or not if you're not following the system. Like, it's just random guessing, and you're not going to be able to improve the weak points and double down on the useful, profitable points without actually collecting data on a very set thing. And you can't collect data if you're all of a sudden changing it. Like, trading off your gut is not a system because the input variables, the things you're basing the trade off of, are probably fucking willy-nilly. They're just, it's the air. Like, and you're not going to be able to learn the good things or learn the bad things unless you know the measurable things you are putting into the system. And when I say system, they're like, that's the biggest thing. And I see this a lot. I'm like, oh, yo, like, what's your system? And they'll say a system, like, whatever, intraday breakout, I go long. Okay, like, what time of it? Like, they don't know the metrics on it. So it's one thing to think you have a system in your mind. And let's say, for example, your system is playing head and shoulders. Let's say you short the neckline breakdown of a head and shoulder setup. So that might be a system, but it's kind of, is it not crazy to be trading that system if you don't know any of the odds? They're like, yeah, no, that's what I trade. It's like, oh, is that net profitable? Do you, like, show me the last 100 trades. What is the average return? What is the average hit? What is the, like, anything on it? What's the time frame that you're using? How are you mathematically defining it? You do not have a system. If someone else doesn't, like, imagine this, hypothetically, you explain your rules to someone else, your best friend who's also a trader, and you each trade in your own room for the day and you don't talk to each other. You do not have a system if at the end of the day, you guys don't have the exact same trades. That's how well-defined a system should be, is I understand all the entry criteria. I understand all the exit criteria. Cool, let's go both trade for a day. Come back, we should have the exact same trades because we follow the exact same rules. If all of a sudden you're like, well, no, generally I take this breakout, but because of this thing, like, I don't know, I just didn't have a good feeling on it, that's no longer a system. And then from there, that's step one. Step two at that point would be for then you to start actually collecting data on the said system. I find that so many people, they hear something on the internet. They're like, yo, like, I heard these people are trading the 15-minute Orbo breakout on NQ. And, like, just because someone on the internet tells them it's good, they then believe that it is net profitable. It's not. I feel like for the past week, like, my soapbox argument has been trust but verify. If you hear a cool trading idea from someone else, be like, oh, that's interesting. But then to prove it to yourself, go out and do the work and collect the data. And I get it. You guys are going to bitch and moan that I don't know how to do it. I don't have a background in computing or statistics or something like that. No one has an excuse right now with AI. AI makes it so incredibly simple. You could go to any of the AI systems at your disposal for free and start backtesting things and get very, very advanced statistical breakdowns of it. So I would have heard that argument maybe 2 years ago, but for you right now, after hearing this, to not have a trading system where you don't perfectly know the odds of it, it is silly. You're just being lazy and you're not putting in the work to actually do this. It's honestly that evident. So if you're sitting there and you're a losing trader and you're continually losing money, blowing out account, with all the tools available to you right now, you have no one to blame but yourself. It is truly your own fault if you, after hearing this, if you continue on that pathway of not approaching this in a mathematical based fashion and you just keep losing money. It is not the market makers. It is not the dark pools. It is not the unfair nature, the manipulation of the market. It is no one's fault but your own fault. You have no reason to not have a well-defined system backed by stats, and from there, it's just more of, can you be disciplined enough to follow it? And that part, I will be fair there, is very, very difficult. I myself, I have many systems, and there's certain days where you just go on tilt. A part of your brain breaks and you just don't follow it. And I get it. And that part, I have much more openness in my mind to hear people and to listen to people who are like, dude, I have my system. I know it works this often and I'm just working on my discipline and following it. Like, I get that because there's something funky about the market where there's money on the line and you just, like, it breaks. It breaks. I am much more willing to be like, yo, let's have a good conversation of what steps can you personally implement in your own life to follow your system perfectly. I'm more than willing to have that conversation. But when people come to me and they're like, I'm losing money. I know I should be trading a system, but I don't have a system. And when I have a system, I don't know the odds of the system. I don't know if it has positive or negative expected value. What the fuck? I can't help you. You can lead a horse to water, but you can't make it drink. It is if you are listening to this right now, like at 11:03 a.m., and you have no background in statistics and you have no background in computing, by the end of today, you can have a trading system. All you have to do is go start talking to an AI system. You can literally do it in one day. It's not even like, oh, you have to dedicate months of research. Now, are you going to have the best trading system by the end of one day? No. Probably not. Maybe if you're lucky, but probably not. But you're also at least going to have a system. And that's for people who have no background in math, statistics, programming. You could have a functioning trading system with somewhat of an idea of the expected value, the expected return on that system by the end of today. So at that point, I don't really have much room in my mind for hearing the excuses from people when they're like, oh, I don't have a system and I'm losing money and I don't know what to do. I don't know. Fucking grow up. Be an adult. Go talk to ChatGPT. Go talk to Grok. Go talk to any of these. Gemini, Claude. It's like any of them. Matt's Tarot is my system. Well, that's a very advanced system. That's actually outside of this world of statistics. That is actually much more of like a metaphysical trading system, which there's room for those too. Matt, what do you expect will happen in June when Trump is forced to default or borrow at current interest levels? 50-50. I would say it has a 50% chance of going up and a 50% chance of going down. Once again, it's like I'm talking to a wall sometimes. The game of predicting is stupid. Why are you guys trying to predict? Stop predicting. It's just literally, this is a game of risk management. You know the odds of a situation. You attempt to place an appropriate size bet. And when you do it, okay, you stick to your risk, you stick to your reward, you stick to the system, and you move on. This is a game of reacting to current trade setups, executing it, and being disciplined to follow the execution of the entry and the exits appropriately. This idea of trying to predict, it's fucking stupid. Do not predict, are we breaking out or not? Do not predict, are we breaking this trend line? Are we going up? The game of prediction is how you lose money. The way you make money in the long term, sustainably, consistently, is just reacting to it. Don't say, oh, we're going to a new high. Oh, I think we're going to get rejected. Oh, I think we're going to break down. No, just wait for something to happen. If you want to play this breakout, great. Set your risk reasonably. Hopefully you have some odds. Hopefully there's a couple other things going on in support, and you throw up your risk, you throw up your reward, and you move on with your life. But this idea of trying to predict when we get to an area of, oh, this will break out. Oh, this will break down. It's fucking stupid. It really, really is stupid. And I don't know how many times I have to say this. It feels like I'm going to say it till I'm blue in my face. Day in and day out, I'm getting these questions from people. What do you think this stock is going to do from earnings? What do you think the bond market's going to do if XYZ happens? And yeah, you can pontificate upon it if you so choose. And maybe you're right, maybe you're wrong. Maybe the market goes that way, but maybe your reasoning was wrong. Maybe your reasoning was right, but the market goes the other way. There's too much of a disconnection between your predictions, whether accurate or not, and actually how it's represented in the market. There's too much in between there that you're just wasting your time. You're going to have a better time playing with your kid or going outside for a walk or hanging out with your cat. It just doesn't make sense. Institutions have tons of people looking into full time. They predict, you react. No, but my point is even they get it wrong. If you look up any major analyst for earnings reactions, overall market targets, they are wrong. Half of hedge funds do not beat the S&P 500 in any given year. Folks, appreciate what I'm telling you. 50% of hedge funds on any given calendar year do not beat the S&P 500. 50%. 50% of people within Wall Street, where this is their day in and day out job, they have the fancy schmancy degrees on their wall saying that they are some of the best in the world to do this. Half of them on any given year do not beat the S&P 500. People who are a lot more intelligent, have a lot more resources, and do this for a lot more time, half of them do not beat the S&P 500. 50% of them. And a crazier statistic is that if someone is a top performing hedge fund, the chance of them repeating and being another top performing hedge fund the next year is basically slim to fuck all. As in, if they do really outperform and they are a top tier hedge fund, it's not a repeatable phenomena. If anything, they're catching a trend of one thematic investment for that year, and then the market's always dynamic, so it changes, and then they don't collect it the next year. As in, when they hit it and they're like a top fund, I'm not talking about market makers, I'm talking about like actual like alpha driving funds, they don't repeat. So and that's institutions. That is like legit straight up Wall Street. If they can't do it, if they are not accurately predicting what is going on, I mean, be realistic. You think you're going to somehow outperform in terms of prediction? You think you're going to somehow outperform all those guys? Nah, not going to happen. Jim Simon's Medallion Fund. You know why the Medallion Fund outperforms? Because it is systematic. It is based on empirical evidence. The craziest stat about the Medallion Fund is their accuracy. The percentage of time they get money per trade is 0.75. They are not even right 51% of the time, and yet they have over $100 billion in net profits in the career of that fund. And how do they do it? Because they don't sit there and predict. That's a quant fund. Data comes in, they look at the historic way that setup has played out, and then they play that accordingly. And they've made, it is the most lucrative hedge fund of all time. $100 billion in profit. They actually make Warren Buffett's career gains look like pennies. The Medallion Fund, which is run by Renaissance Technologies, is no longer open to the public. It's only open to internal investment from their employees. It's about 300 employees, 200 of them have PhDs. They're out on Long Island. It's very secretive, and they just run like the most advanced models in the entire world, and it is just purely algorithmic trading. And they're not even right that often. They're not even right 51% of the time, but yet, because of risk reward management, properly putting in the data, and being the smartest people in the room, they've made $100 billion in profit. They are by far the best. Let's see. Historic Medallion returns. Let's see if we can actually, I think per year it's around 60% or something like that. Medallion, peak and bubble. I just want the total, the cumulative. A net return of 39% from 1988 to 2018. Do you know how much this would compound? Like, no one's ever going to come close to these numbers. Have generated over $100 billion in trading gains, a net return of 39%. If you put $1,000 and you compounded that by 39% for 20 years, do you know how much fucking money you would have? $1,000 would turn into $750,000. $1,000 over 20 years at that return for 2 decades would be $750,000. That's insane. Absolutely insane. And how did they do it? They did it from pure math. They did it from just basic math. Jim Simons, who's now passed away, he's an absolute OG. His one criteria for hiring people is he just didn't want people with a finance background, because people with a finance background, they learn from other people with finance backgrounds. People with finance backgrounds are not good at trading. They might be good at finance. They might be having interesting conversations at a dinner party of the socioeconomic woes of our time. But the people who make the most money in this game are quant funds such as Two Sigma, D.E. Shaw, Renaissance, AQR, they're continually the best performing, and then also market makers. And guess what market making it is? It is a high-end game of math. Market making, if you look at Citadel, Virtu, if you look at all these players who are continually getting the biggest returns, the one thing that's holding true for all of them is they're just the best math nerds. They're just the best math nerds. It is not these fuckfaces who just like can drone on about monetary policy. Those are not the people who consistently make a lot of money in the long run. Once in a while, you can have certain periods of their theme and their opinion being right. And if it overlaps with the current market mood, they can make money. But you're not going to find someone who repeats that year over year over year. It simply doesn't exist. It simply does not exist. I implore all of you to fact check me on this. I implore all of you to spend 10 minutes trying to disprove me on these statements. Come back to me tomorrow and try to yell at me. But the more you uncover, you're going to realize, oh, wow, people who predict these analysts are fucking wrong. And they are wrong a lot. We're getting a little bit of a pop right now. Here's a look at Flow. Mag 7 seemingly bottoming. Ideally, it could get a bit of a pop here. Same thing with the SPY. Ideally bottoming. Hopefully, we can get a pop. I'm just looking for a movement up into somewhere in this 10-point region. And I think that's, in my personal opinion, that's going to be the high of the day. And why I'm predicting that, even though I shouldn't be predicting it, I'm not predicting it because of gut feel. I'm predicting it because I can do a basic reading of the options chain, and I could see in real time that there are not more aggressive bullish bets coming in above that level. I wish there were. I wish I had more positive news to report to all of you, but right here, I mean, anyone with at least a functioning eyeball can see that there's a giant gamma node right there that's going to be extraordinarily difficult to break above. I'm not saying it's a non-zero chance. Of course, there's some chance we could do it. But in terms of, once again, a repeatable methodology time and time again, if you can catch a low risk trade and trade it up into a key level, you take your money, you move on with your life, and you come back another day. So I'm not predicting it as in, oh, like I just feel here. I'm literally using the market maker influences to understand where a trend could potentially stop. That's how I engage with the market. If you choose to engage in a different way, hey, have at it, especially if you're profitable. If you're not profitable, maybe it's time to engage in the market in a different way. So just throwing that all out there. Anyway, I will post later on how this trade plays out. Right now, I am slightly green. This is my third trade of the day. First trade, break even. Second trade, break even. Anywhere, depending on the week or the month, 30 to 40% of my trades are break even trades. So this is not outside of, I guess, normality for me. I'm hoping to catch a trend. I would love for a breakout. I would love for this to take out this recent high. That would make me feel a lot better about my life. But whatever, I'm risking the recent low. If we get up into this zone, if we can take out 40, 42, something like that, I will be moving my stop to break even. And then I have a free trade. If it runs, it runs. Great. If it comes back and knocks me out, unfortunately, it comes back and knocks me out. So that's my trade. I will post on whatever Twitter later today if you guys are curious of how it plays out. But if I trade well, the worst case scenario is 16 plus 25. So about a 30-point hit, which would mean my worst case scenario is I end the day down like between $600 and $700. And the best case scenario is I make $1,000 on the day. So best case scenario, worst case scenario, ideally I get a little bit of a trend up. I move my stop to break even. And then my worst case scenario is break even. Best case scenario, once again, is back to making 25K on the day. So that's how I plan on managing it. Before I let you guys know, the Mag 7 is now trending down and the SPY is trending sideways. So not much of a trend. Let me give you some other info. The bounds of the day seem to be 5,900 on the bottom and then somewhere between 5,950 and 6,000 on the top side, depending on who you talk to. And then let me check one more service just before I peace. Yeah, 5,900 there, 5,950, 5,960. Consolidating. We got that bullish push sideways. There's a real good chance that we see choppy bullshit for the remainder of the day. And if we do get a push to the upside, I'm not looking for anything too special above 5,960. And if we get a smack to the downside, I'm not looking for anything too special below 5,900. That's how I view the market. Those are my opinions. Take it for what it's worth. Obviously, a shout out to Public. They are today's stream sponsor. And last but not least, I do want to remind you that this Apex deal ends in 1 day, a day and a half. So I'll give you a reminder of it tomorrow, but use that code Goonie on both Apex and on Take Profit Trader to get whatever the current best deal is. Once again, GOONIE. It's in the description of the video. So right here, just to show you, obviously I am trading with 20 Apex accounts. I am trading with 5 Take Profit accounts. That is the max allowed on both of them. If you want to trade with someone else's money, the code Goonie, GOONIE, will work on both. And if you need a link, it's in the description of the video. Folks, that's what I have for you. Like I said, be systematic, be robotic, be cold, be emotionless, stick to your trade, move your risk, be a risk manager, don't be a predictor. That is how you're going to survive this. Later on today, I will be posting an update video, and then we're going to be streaming again tomorrow morning, 9 a.m. bright and early. I hope to see you there. In the meantime, don't forget to do your homework and check out that evergreen video that was loaded up entitled Why 95% of Traders Fail. I highly recommend you guys all watch that regardless of your trading level. So make sure you are checking that out. I appreciate all the good vibes. I'll catch you guys later on today. Much love. Peace.